2-2. All right. Okay, just about ready to go. Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Apologise for being 20 or so minutes late. I was taking care of Leah. Leah's my wife, if you don't know, if you're new to the show. We are a very personal, real, family-style show here. It's a journey of real life, and we share it all with you. I want to thank everyone for your support this morning and your good wishes and prayers to my wife, Leah. It's very appreciated. She's very private. She doesn't want to come on camera, but she really appreciates it. Yesterday, Leah had flashes in her eye, and we had to take her to a hospital where she had laser surgery. She had a break in her eye, and it would have led to a retina detachment. A retina detachment means you can go blind in that eye. So fortunately, the retina had not detached. It was broken around the edge of the eye. So incredibly, immediately it was done. Appointment in, investigation, and the laser surgery was done immediately to correct it. So basically fix the break, so then it wouldn't progress and become a retina detachment. That's all now taken care of, and Leah is recovering. So yeah, she was very upset yesterday. You can imagine she was thinking that she could go blind, because a retina detachment is exactly that, and it involves major surgery on the eye and lots of recovery. Spend the next few weeks with your head down and not able to lift your head up and all sorts of stuff. So anyway, she avoided that with the laser surgery. I want to thank all the people that involved. Completely incredible, really. To be able, I don't know what it's like in England to be able to do that, but to call up in the morning, get an appointment the same day, get it looked at straight away, no messing around. We've waited no more than 20 minutes at the surgery, and then be offered the laser correction immediately, and 20 minutes later, left, done, dusted. So thanks to all of you. Thanks to MSK last night, who gave a whopping £100 super chat. We used that money to buy the aftercare treatments that Leah now has, and some food on the way home. So that was very, very kind of MSK. All right, so thank you very much indeed for all your support. Appreciate your support. It's lovely. I mean, this is what this show is all about, the fact that we can share life together. We're all on the journey. We're all going to have problems. We're all going to go through things together. And it's, lovely that we can share it. There you go. So thank you very much once again. Ditto to you, dear Leah. Get well soon for us and you and yours, and us and them and theirs, said Bill. Good morning, mine. Hope Leah is well. There you go. Get well, Leah. It's good day for Beam scalp trading, says Rob Brennan. Get well, Leah. Thank you, John. Get well soon, Leah. Well done, Martin, for acting quick. Well, that was Leah. I mean, she's like on it like a car bonnet. I mean, literally, Leah jumps on everything. I would just fall over and rot. Leah, she's boom. Let's get it checked. Let's get it sorted. And dead right, absolutely right. Get well soon, Leah, because if you'd left it, then it could have detached, and then serious. Oh, look at this.
Stacey Bailey donated $2 through a super chat. Get well, Leah. Smiling face with hearts, heart. Smiling face with hearts, heart. Smiling face with hearts, heart. Smiling face with hearts, heart.
There you go. Thank you very much indeed for that. James, get well soon, Leah. Sending love and thinking after you. Lovely. Octavio, good morning. Good morning. Amazing news, Martin. Modern technology is a blessing. It's just. I tell you what. I'll tell you about the laser. I mean, flipping out. I've never seen anything like it. About 25 years ago, I had my eyes lasered when it first came out. Corrective surgery, right? For corrective vision, not for a break in the eye like what Leah had, an actual just normal corrective vision. And they lie you down, they pin your eyes open. There's a machine that they adjust to aim at your eye, and then they fire, and then they adjust the machine, and then they fire, right? So it's kind of like, as you'd expect it. This, oh no, this is like the X-Men. This is just unbelievable. This lady, this woman who was doing it, she put on a headset which is completely free. It's on her head. Wherever she looks, that's where the laser goes. And I was like, and I was in the room. I had to wear glasses so I could be in the room and watch it. So I was watching it, and she would look into Leah's eye, and then with a foot switch, fire the laser. And it's like, what if you moved your head? Now, I'm guessing, I mean, I've never seen it like it. She kept really still, but I'm thinking, you've got to be microscopically still. And I'm guessing, this is just me guessing, I would imagine what she's got, the headset, she can see, she's got magnification, she can see the detail of the eye. She's probably got like some sort of crosshair, and the laser would focus on something, and then perhaps it would then lock onto that. She'd lock it on like a gyroscope, like a heat-seeking missile. You know, when it locks on, it's locked on. It doesn't matter if the pilot of the plane flies, the missile always goes the right way. I would imagine she looks down into your eye, focuses on it, locks. Once it locks, then you fire and boom. But as like flipping heck, it's like you know, X-Men or some sort of cyborg or whatever. But she just looks into your eye and presses a button, and pew, and then this green laser comes out. Yeah, amazing. But you're right, technology today, I mean, you take that for granted. I mean, someone had to, you know, many millions of people were involved in many, many years in the development, design, manufacture of that equipment, and then the training, the knowledge, the skill that went into it. You know, absolutely amazing, really, when you think about it. Yeah. Good morning, everyone. Amazing technology. Oh, Team Fusion, I've sent you a message. On Discord. 2 hours from now, Team Fusion, who's a gold member, he gets one-on-one video calls to discuss certain topics, like his YouTube channel, for example. Has booked one of his one-on-one calls. So in exactly 2 hours from now, right, it's 8 a.m. Central now, Team Fusion, you're in Spain. So in 2 hours from now, it's 10 a.m. Central, okay? So that's 2 hours from now. I've given you the link. You click on the link on a browser, on your phone, on an iPad, whatever. You just, all you need to do is enter the password. It's case sensitive. And you can then call in, all right? You can then call in, and we'll have our conversation, all right? Okay. Hi, sir. What about Neo? We've not looked at it, Carlos. We've not looked at that before. You have to be a member if you want me to request a review or anything like that. Wish her well, Martin. I had one last year, and it ain't fun, to say the least. Was under the NHS, and my booper didn't kick in over the weekend, but wish her well. So you were in the UK. So Simon, could you share your experience then? You were in UK, but you went private because you were using booper. So hang on. Wish her well, Martin. I had one last year. So you had a break in your eye, and then they do the correction to prevent the retina detachment, right? I ain't fun to the least. It was under the NHS, as my booper didn't kick in over the weekend. But wish her well. So what happened? I'd love to know, because you did it through NHS. Was you able to did you phone the doctor? Did you get in the same day? Did they correct it? Was it all free because of the NHS? I'd love, Simon, because Leah would love to know, because we're going to retire in England. We're going to retire in England in the future. And, I've always said how great the NHS is. However, we're all familiar with the fact that, the United States is quicker. So I'd like to know what your experience was. That would be really, really, really great to actually hear that. Let me just see if I can make this a bit better. Just bear with me a second. Let's see if I can make this slightly better. There you go. One more nudge. You probably didn't even notice that, but I just made a slight adjustment. All right. Yeah. So I'd love, Simon, love to know what you think about that, or what's your experience. Good morning. There's our super chat from Stacey Bailey. Thank you. Martin, make Leah extra cups of tea. Absolutely. Here's my cup of tea now, Mike. James, let's turn the light on. Let's have our cup of tea. Cheers, James. There you go. I just realised we did a different camera angle. Didn't change it, did we? David Ewan, prayers for Leah. Thank you, David. Good morning, all Lucas aides. How are you, John? What is John Grimshaw? John Granfor. Oh, great. John Granfor is in. I'll come on to John in a second. We were all asking about John yesterday. Get well soon, Leah. Good morning, James, mate. How are you? Did you get some coffee? Thoughts on Beam? Could be similar scalping opportunity to Zap yesterday. That is for Ed Nevius to comment on. I am not the one for the scalp trades, as you know. Get well, Leah. Good morning, Crag buddy. How you doing? The nurse was Homelander, says Rob. Nice one, mate. I think the machine was a decoy, and she actually has laser vision. Cyclops, yeah. John, here he is. Now, John Granfor. We had all sorts of bother yesterday with you. I couldn't remember if it was John Granfor, John Grimshaw, John Greenfor, I was all over the place. John Granfor. We started the show. If you look back on yesterday's show, what time was it? Was it yesterday night? Was it yesterday morning? I think it was yesterday morning, John. If you look back at the show, the yesterday morning, the first 10 minutes, it was all about you. Everyone was sending you luck. I asked everyone to do that. So a lot of love went out to you, John. We missed you on the Friday night show, of course. Missed out on Wonderful Tonight. It's not the same without you and Brenda there. And yeah, just know that we were all asking after you. And obviously it's great that you're with us. So that's really great. Don't forget to hit the like button, says James. Hello, what do you think of Tilray? Tilray, it's going to get, I believe, legalization before the election, and it's going to pop. That's my thoughts on that. I'll be there in 2 hours. Thank you, Team Fusion. Good morning, all. Jenny, good morning. How are you? You no longer remember, Jenny. Just remember, you miss out on a lot of the live streams for members only, a lot of the videos that are members only, many perks that you don't now get. I'm glad that you're okay, John. Scary stuff. Yeah, sending positive energy to everyone. Thanks, Daisy. It's just a way of life on the Gulf Coast, it is. Yeah, detached retina discovered on Saturday. On Saturday evening, Bupa, next to Useless, went to Moorfields in London on Saturday night, and I had surgery on Sunday afternoon. All free, but quite scary experience. There you go. I'll tell Leah that later. So you essentially had Bupa private, but it didn't kick in. It was useless. But the NHS did. You went to the hospital Saturday night and you had surgery on Sunday afternoon, all free, but quite scary. And that was the full retina detachment. Brilliant. So you went to the hospital, right? You just turned up. Is that what you did? See? Brilliant. People always say they run down the NHS, and I know there's problems, but it's regarded as the best healthcare in the world. It's all free and it's available to anyone. But sometimes you have to wait. But I've always said, I'm sure, because I'm not living in England right now, so I'm not up to it. But when I was there, it was great. But I always said to Leah's heard all the scare stories about you have to wait. And I've said, well, yeah, you might have to wait. But I'm sure if something's urgent, like you have to have surgery now, you're probably going to get it. And Simon Meadows said, yes, he did. He went in Saturday night, Sunday morning, Sunday afternoon, surgery, all free, bang. That would have been 10, no, maybe more. $20,000-$30,000 in America, and you'd have to pay for that. That could bankrupt you if you haven't got insurance. Although we renamed you John Glenforth or Granforth, or it was a right nightmare, if I'm honest. But anyway, Stacey Bailey, let me just check for you a minute. Stacey Bailey, I need to upgrade you. I want you to be a moderator on all 3 channels. You are a moderator on this channel. Can you pop into the extra channel just for a second and let me check? Would you mind just dropping in to the extra channel just for a second, Stacey? Leave me a comment. When you've done that, I want you to go into the music channel. So if you can go into the extra channel first, give me a comment. I want to check. And then I'll ask you to go into the music channel. So go into this Friday's live show. I'll give you the link in a minute. But let's do one at a time. Go into the extra channel. I want to see you in there first. I want to make sure that I've made you a moderator in there as well. All of the big surgeries. Oh, Stacey Bailey. There we go. I'm here. Stacey, thank you very much. Stay where you are. Stay where you are, Stacey. Let me give you the link now for the Friday show. Right. So you are a moderator here. There is the link, Stacey. There's the link for the music concert on Friday. Click on that. That'll take you to the live concert on Friday. Leave a comment, and I'll make sure that you are a moderator there as well. James 007's already there. He's a moderator. Just want to make sure. Leah said that you wasn't a moderator in the music channel, so I wanted to make sure that you were. All of the big surgeries are now in London, so it depends where you move to in the UK. So would you have gone to London? Hope you're all good, John. Stacey Bailey, there she is. Right, now then, let me do this. Switch account. Martyn Lucas. Leah's right. You're not a you're not a moderator. Right. Please comment again, Stacey. Please comment again, Stacey. And then you should now be a moderator. If you could comment again, I'll be able to see if you've been upgraded. Yep. There you go. That works. Brilliant. Excellent. Thank you, Stacey. Isn't that brilliant how we can sort all that? Let me change back the account. There you go. That now works. There you go. Brilliant. That's taken care of that. Stacey's now a moderator in all three channels. Okay, cool. As is James, I think. James is too. Right. Okay. Hope you're all good, John. Cheers, Martin. Time for a nice... Yeah, just done that. I've been called worse. Oh, yeah, Grimshaw. That's what it was. Yeah. Grimshaw. Why do I have commercials on my iPad and TV, but not on my phone? Well, you might be in... Why do I have commercials on my iPad and TV, but not on my iPhone? You might be in a different account. You might be signed into YouTube on a different account. I can't possibly know the answer to that. You might have YouTube Premium. YouTube Premium. I have YouTube Premium, and I never see any ads on any channels and I have music and everything else. So if you have YouTube Premium, the creator still earns money, but you never see an ad. So you may have YouTube Premium on one account and not another. Also, it depends on so many factors. When you first come in, when you watch, if you've been watching on your iPhone for a while, if you've gone from one video to another channel, YouTube don't want to keep giving you fresh ads. They've given you enough, so you might not have seen it on one. There's a lot to it, but that's a general gist of it. I'll go back and look. Yes, thanks all. Yes. Great news, John. Glad all safe. We are prepared for the storm now. The cleanup begins. Yeah. Thank God for the metal roof. Absolutely, metal roof. Great to see you back on the horse. LGVN in place this morning, waiting for volume confirm. Best regards, Leah. Eric J, thank you so much indeed. That's very nice indeed. I finally watched the members' perks video yesterday. How's the progress on the crypto coin? Oh, I thought you were talking about the crypto challenge. That's why I asked you to talk to Sensei. You're asking about the crypto coin. There hasn't been any progress on the crypto coin yet. There's been other things to focus on, but it's going to happen. It's definitely going to happen. I need some more money, though, because it costs money to do it. I've got to buy so many to burn. There's all kinds of costs involved. But it's going to happen, but there hasn't been any progress yet. I'm just learning all the time, but it's going to take a while. But thank you for asking. It's not forgotten. Mike, because of taking care of Leah yesterday and all the different things, I didn't get a chance to listen to your song. I know you probably would have remembered to ask me about it, so I wanted to jump in first and remind you that I know about the song. I didn't get a chance to do it because I was taking care of Leah. Good morning, Martin and family. Just caught the end of the show yesterday. Hope Leah is feeling better. Yes, I've just been talking all about Leah at the beginning of the show. I don't want to go over it all again. If you do want to learn all about it, it's the first 5 minutes of today's video. If you just want to take a quick listen. Thank you for asking. But we haven't got time now to go over it again. Eat more carrots. Bugs Bunny says carrots are good for your eyes. Both my parents have glasses young. I don't. Thanks, carrots. Love it. Good morning, all awesome people. Stacey Bailey. Congratulations, Stacey. Moderator upgrade. Yeah. Good morning, David. The hospital will prioritize certain things. Breathing, eyes, chest pains are all prioritized as immediate breaks. Injuries, etc., are treated within a time frame. Hope that makes sense. Yeah, that makes sense. That makes sense. It's obvious, isn't it? If it's free, there's only a limit to what you can provide for free. Everybody in the world turns up and wants it done. You've got to prioritize, and that makes sense. I walk in, I want immediate treatment. What's wrong with you, sir? Bit tired, but I want brain surgery because I think brain surgery is going to help my tiredness. Well, you say that, but, no, I want it now. I want brain surgery now for free on the NHS because I do, and, whatever. Anyway, congratulations, Stacey. Morning, Dave. Afternoon, everyone. Hope Leah gets better soon. Congratulations, Stacey. Wadey, morning all. Hustle Brothers. Thank you. That made my day. I needed some great vibes. Yes, fully aware of that. Stacey was feeling a bit down, and I'm glad to hear that made her feel better. Then it was worth it. No problem, mate. Joe Agan on the band Steelers wheel has passed. Joe Agan on the band Steelers wheel has passed. Had him stuck in the middle with you. Had the song stuck in the middle with you. Congratulations. Streaming on the music channel today. Go, go, go. Just coming up to 3,800. Jerry Rafferty was the co-founder. Thank you, Mike. Mike, could you send me a message in Discord, please? Remind me. Jerry Rafferty, congratulations, staying on your promotion. Get well soon, Leah. Do you think space is going any lower today? Let's have a look. We've got through all the comments now. Let's see where we are. 104,118. We've got, what's it now? 30 minutes. How long is the show so far? Let me do a quick video. 25 minutes. Secret to wealth. 25. Oh, Stacey Bailey has just gifted 5 memberships. How about that? Would you please thank Stacey Bailey for doing that? She's just given away 5 memberships. How very, very kind of you. Thank you for that, Stacey. A few people let them lapse, and it's the lifeblood of the show. So that's a huge honor. Thank you. There we go. Danny Rothschild has just become a member. There you go, Danny. Please thank Stacey Bailey for doing that. She's paid for that out of her hard-earned money. Caden Youngquist has become Caden Youngquist has just become a member as well. Look at that, absolutely awesome. Thanks, Stacey Bailey, for that as well. Let me see if I can. How can I fix this? Hang on. Credits. Oh, there's another one. Eric Wood, please thank Stacey. Absolutely great. Eric Woods. I think we have a couple more. That is very, very kind of Stacey today. Really, really kind. Oh, there's another one. Chris Schultz has also got a membership back from Stacey. It keeps your history as well. Doesn't give you full access until you upgrade yourself, but please thank Stacey Bailey for doing that. And what I'm going to do is just for a moment is I want to be able to turn that round. Can I turn that round? Jan Lernby Jan has also become a member. How can I turn this one round? Shadow, video source, more options, rotation. Oh, wait! I didn't know I could do that. I could be on my head. That's interesting, though, isn't it? I want to change that though. Camera effects, window, camera effects. I don't know if I can do this. Let me see if it works. I want to flip the screen. Can I do that? Zoom, picture settings, mirror. It's locked. No, is it locked? Oh yeah. Do that there. Turn it round. There you go. So now I'm looking at what's going on, and it should be, hopefully, not all scenes, just this one here. That looks better, doesn't it? Now I'm looking at what's going on. I like that. That's good. Now if I lock that scene, right, that works really well. And I might want to just bring it up. Whoops. Always trying to make things better. There you go. How about that? How about it? I think that's good. Any more suggestions? Right, there you go. That will lock that down. That will be great. And hopefully, when I go back to the normal camera, it won't have me facing. There you go. Face the right way again. Absolutely great. There you go. Fix that. Always making it better. Right. Thank you so much indeed. Right. I was going to make a video. If I got time, I'm going to have to make it now. I'm going to have to make it after the bell goes. Welcome. Hang on. Some comments I might have missed. Some scalp trading. Let's have a little look here. Welcome, Eric. Thanks, Stacy. All about the talk. Take advantage of all the membership perks. There are many. The membership perks are designed to help you. My way to give back. Best family to join on YouTube. Welcome, friends. Yes, thank you, Stacy. Massive help to the show, and all those benefits as well. Very, very nice indeed. Welcome all, Darren Knight. There you go. Thank you, Stacy. Adriana. Thank you very much. Adriana's thank you. It's very nice. Something tells me Stacey Bays is on Christmas card list this year. Oh, there you go. Now, don't forget, you can all have a Christmas card from me if you sign up for our newsletter, martynlucas.com. Go onto the all links button, get the newsletter. I don't send you emails all the time, only urgent stuff. It's a backup for the show and birthday and Christmas cards as well. So please take advantage of that. It's a free service. It's all part of being a member. Who is moderating the chat whenever Stacey's name, my comments are deleted? No, your comments aren't deleted, Team Fusion. I'm reading your comments now. The only reason why your comments won't appear is if you use a link or as if you swear or say a word, that's banned, stuff like that. But no, all your comments are coming through. What are we looking at today, guys? Everything. Please don't waste money sending me cards. Invest in CUA. I honestly thought them in the trash. Unless there's money in it, they'll take it. LOL. I see your comments, Team Fusion. Yep. Andrew. Oh, weird. It's been deleted at my end. There you go. Stacy. Sterling contribution, Stacy. Throw them in the trash. There you go. Right. 3 minutes to go. Let's get ready to ring the bell. All right. So there you go. So I can actually turn these cameras around. Look at that. I can look different ways. Ooh. What's blur effect? That's a good idea. Yeah, just do that one. Anyway, let's do blur effect. Definitely do blur effect. Way to go. Right, okay, 2 minutes to go. Let's get ready for our stock race. And the news in the United States of America. We've got more reviews today. Don't forget to take a walk today, Martin. Absolutely right. Priority is your health, folks. It really, really is. Mike is absolutely right there. Without your health, really, nothing else really matters, to be honest. Really. You can be poor with no money, but if you've got your health, then the poorness hasn't really affected you that much, has it? Think of it that way. It's important, that, I reckon. Right, just coming up to our time. We're going to get ready now. We're going to line up our US news. We're going to go another week of ascertaining whether you like this section of the show. Watching to see what the views are like on these news items every day. So we're ready for the music, ready for everything. If you just tuned in, click subscribe or ring the bell, and tap the like button as well. That would be great. Okay. How many we got? 23 likes, 56 watching. That's nice. 29 watching, 59 watching, 29 likes. Brilliant. All right, let's get the Sensei bell. Remember, you can sponsor the bell for $20. Put links on the screen and all sorts of stuff. And drink plenty of water. Yes. Oh, by the way, we passed 27,000 the other day. No one even said anything. You're just so used to it now. We went through 27,000. Anyway. 5, 4, 3, 2, 1.
The year is 1991.
Damn it, I messed it up again. I've messed it up again. I've got to do it again now. Otherwise, it won't work for the video. Damn it. 5, 4, 3, 2, 1. The bell has gone, and welcome to the stock race and the US news. In the next couple of minutes, we're going to go through all the stocks. This is my portfolio, breaking all-time records again. Started with $5,000. I'm now at $104,082. There is my position, and I'm all in, and I'm using margin. Let's go for all the positions and see what's up and down today, and then we'll cover the US news. Have you tapped the like button? Have you subscribed and rung the bell? Come on, get involved, be part of it. Here we go. All right, let's go straight away. Virgin Galactic, no surprise, has collapsed again. Another all-time low for Virgin Galactic. It's being dumped by everyone now. Palantir is up today. Gold is up 0.16. The S&P is up today. 0.17. The Amazon is up 0.28. Apple taking a bit of a dive. I told you at 225 was my target. Next Era Energy up today very slightly. FFIE is down nearly 5%, now 39 cents, going to zero, that one. Enphase Energy is going down 1.37. Coca-Cola defensive up 0.24. J&J is flat right now. Chevron on the way down, down 1% today. Tesla, I like the company, but I think it's overbought, and I think it has a long way to fall. Rivian going back down slightly. McDonald's just trimming off 0.5%. Google having a nice day, up 1%. One of the best AI platforms to buy. It's the best value compared to things like Nvidia. Microsoft also compared to them, very expensive, up 0.1, just trimming back. Nvidia still running. Look at this, 2.5 today. Absolutely great, but massively overbought now. Walmart is on the way up. Tilray is up today, 0.57. Robinhood is up 0.54. IonQ is just trending down. Rocket Lab is now under $5 again, going back down. Plug Power, good value here, down 0.72. Rumble is down slightly. Funware is up 0.17. Asti just going down 13% today. Had a nice bounce yesterday. FFIE going to zero. Nowhere it can go. It has no value whatsoever. Bitcoin, it's flat today at 57,000. I think it could go all the way back down to around about 15,000. Most people don't want to hear that, but that's what I think. Let's now go over to the news. What news have we got? Hurricane rips through the United States as detail as 7 people killed. Very, very sad, and we wish everybody the best and safe recovery. Man rescued from flooded truck in Texas. Yes, the hurricanes do bring in floods. I know. I was there in Hurricane Irma, in the eye of the storm, one of the biggest hurricanes in history, a Category 5 when it hit St. Martin. I was there and rescued by the U.S. Air Force. Biden doctors reveal findings of extremely detailed neurological exam. Biden has now said, again, he is not being treated for Parkinson's disease. He's not coming out of the race. People on YouTube trying to get free views keep saying, evident to say he's coming out of the race. There isn't. It just gets people to watch the videos. He's not said he's leaving the race at all. Brits among hundreds of tourists flocking to Death Valley despite deadly US heat wave. People rushing to the heat, the highest temperatures in recorded history. Strong performance by Biden won't fully silence drumbeat of doubt over ability to beat Trump. Time to end it, Biden. Biden says he will stay in the race and tells party to put drama aside. I'm not going anywhere, he said. Alec Baldwin, Rush shooting trial begins today. Here are the key things you need to know. Toxic metals in tampons. Well, never thought I'd say that live on my show. Can you believe I just did? Anchorman actor facing up to 5 years in prison after admitting role in Capitol riots. There you go. All eyes will be on Biden at NATO summit, and the risk of missteps are huge. Yes, that video has gone around many times of Biden falling down the steps as he leaves Marine One. Alec Baldwin arrives for pre-trial hearing. Are you like me confused that this seems to just keep going on and on and on forever? Las Vegas hits all-time temperature record. Here's something a bit fun for you. Chicken run. Cops chase evasive birds. Yeah, we've got cops in the United States running around chasing chickens. Never thought I'd say that on the show either. Boeing to admit fraud to avoid trial over crashes that killed 346 people. I think that's pretty much covered it. Octopus sex scene came as total shock to TV star. There's your news today. Looking at the stocks, as you can see, we're up. Let me zoom in. My Face ID always takes me a couple of seconds. I don't know why. Come on, Face ID. There you go. Pick me up. All-time highs once again. Did you tap the like button, subscribe, or ring the bell? Leave me your thoughts and comments below. It's a new section of our show every morning on the opening bell. Do you like it? Do you want me to keep it in, or do you want me to throw it in the bin? Click above my head for all the links down below in the description, and more new. The whole playlist is over here, and another playlist I think you'll find interesting. Until next time, as always, take care of yourselves and each other. Wow, tell the story, Martin. Floods on the way to Michigan. SNGX as well. Where he spotted that one. Zap, still on watch. Rocket Lab going up. Sid, how are you, Sid? Lovely to have you here. Congratulations, Martin. Thank you. So, what's going on with space? Any update other than it's tanking? Yeah. No, I haven't got any. There's no reason. There's nothing to say about it other than the false pump we've had with space when it comes to... hang on. Another all-time low. Yeah. Okay. Let's be honest here. Let's do a little thing here. I wanted to do this. Secret to wealth. So what's the time now? The time is 43. Right. In this video, I'm going to give you the secrets to wealth, what you should be doing, what you shouldn't be doing, and some real, honest, frank information, which will probably get many of you to unsubscribe to me, not follow me anymore. I don't know. I don't care, as long as what I tell you is real and truthful. That's why I do this. So let me give you the secret to wealth, how to build wealth. The first thing you should be doing is not listening to me. Not because I say the wrong thing or say the right thing, because at the end of the day, wealth is about income, not about investing or gambling or anything else. It's about income. I am 55 years of age. I've toured all over the world. I've had my own successful businesses. I've run a large business one night in Vegas where I employed about 30 people, and we earned millions and spent millions and made money and lost money. I've experienced bankruptcy once. I've experienced personal loss. I've experienced most things in life, I think. So I have some experience, but I'm not here to get you to subscribe to my videos or watch my videos. I'm here just to go live and talk to people live, entertain, be real, be honest, and share with you the facts. The facts aren't always what you want to hear, but they are the facts nevertheless. The facts aren't always popular. It's not sensationalistic. You're not going to subscribe to hear it, but it's the truth nevertheless. So let me share with you the secret to success, how I've been able to make money here, how I've been able to make money in other businesses and in my life, achieve the fact that I've got no mortgage, no car loan, no credit card debt, and I'm pretty much financially free right now. And also the journey of YouTube and how I'm growing on YouTube and how that is how that's impacting my income and everything else. So let's talk about it briefly in this video. If you do like a real honest video, do tap the like button and do consider subscribing. But let me tell you, I see when I first came to America, many people keep going to network meetings, keep going to how to get rich seminars, and I kept seeing the same people always there. Surely, if the information provided on YouTube or online or in person was any good, you'd be busy making money, not keep reappearing at the investor seminars like you've seen these big concerts that they do where everyone pays a huge amount of money to be told how to get rich and how to get famous. Some of the most popular videos on YouTube are how to grow YouTube channels. They don't know how to grow YouTube channels, but they do know how to get you to watch and ask that question, which then it becomes a self-revealing prophecy, because the fact you're asking the question, you're watching, which means they become successful. So now they must be successful because of you watching, not by what they're saying. Same as people on YouTube telling you how to get rich, what to do, and all the rest of it. The reality is what I'm about to share with you now. So, if you want to get rich and you want to be financially free, there's one simple rule. The secret of wealth is to realize there isn't a secret. There's no secret to life. There's no magic sauce whatsoever. Some people win, some people lose. Some people win because it's their own fault, and some people lose because it's their own fault. Some people win because it has nothing to do with them, and some people lose because it has nothing to do with them. Nothing in life is fair. People that work the hardest don't necessarily succeed. People that are lazy don't necessarily lose. That's just life. If you expect life to be fair, you're watching the wrong video. Life isn't fair, and anything can happen along the journey. If you're born in the wrong body or you're born in the wrong place at the wrong time, things might be more difficult for you than somebody who was luckily enough born somewhere where there wasn't a war going on, where there was plenty of food on the table, and perhaps they have a healthy body, not a broken one. These are things that you cannot control. However, there are certain things that you can control, and these are the things you should be focused on, not the things you can't control. So, for me, I decided to build a YouTube channel, not because I want to get rich or make money, because I like entertaining, I like speaking to people, and I believe that people want real, live, every day. I'm making this video live. I don't know what I'm going to say. I'm just saying it as I feel it. It's not scripted. I don't write it down. I don't plan it. I just say what I feel when it comes out the way it comes out. But I have learned a few things in life. And I'm going to share that with you now. So you decide, first of all, that you want to be wealthy. Well, you have some control over that, but not all. People that will tell you, if you never give up and you stick at what you're doing, you will win in the end. That is the biggest load of nonsense I've ever heard. You could decide to, in my case, build a YouTube channel, and if I keep doing it and I keep doing it and I keep learning and I keep making videos, one day I'm going to be the most successful, richest YouTuber in the world. That's not the case. I've now produced nearly 6,000 videos, more than most produce in a lifetime, and I've done okay, and I'm happy. I love what I do, but compared to how much I put in, I haven't got a fraction out of what I should have done or could have done. Who knows? But the reality is I love what I do. So I'm successful anyway because I love what I do. That's the most important thing. Do what you love to do and you never work a day in your life. Some people say that. Well, I do love what I do, but I still work and it's fun, but I still get down. It's still hard work. I still get depressed. I still get tired. I still get frustrated. I still get angry. Just because you love what you do doesn't mean it's all a free ride and it's all easy. Everybody online tells you their lives are great because that's what people want to see. If you go on Facebook, everyone's having a holiday. Everyone's having a great time. It's what people want to see. In reality, everybody isn't on a holiday. Everybody isn't buying a new car. And you're only seeing the 1 in a million who does and shares it on Facebook or whatever. So no, we all come into the world the same and we all go out of this world exactly the same. Nothing changes for anyone. It's the same story all over. But let's get back to how to get wealthy if that is your goal. If your goal is to be wealthy and financially independent, even if you achieve it, and I'm going to tell you how to achieve it now, or how I'm achieving it, that doesn't mean to say that remains the case forever, because things can come up and things can go wrong at some point in the future. Even if you do everything right, things can go wrong at some time in the future and there's nothing you can do about it or even prevent it. But let's start by how do we make money? The most important thing is knowing that there's not a secret. No one knows the magic sauce. Shouldn't waste any of your time listening to anybody else. You should be doing it yourself. You should be earning money. The number one thing is earn money. It doesn't matter how much you earn. Doesn't matter whether you earn $1 million or $1. It doesn't matter. As long as you are earning money and spending less than you are earning, you are going to win. And I know this. I left home at 16 and I earned about £40 a gig. I lived in a broken down caravan, in America, I think you call it a fifth wheel or whatever, a mobile home, a little caravan. We tow behind a car. That's what I'm talking about. It was a broken down, old, moldy, rusty caravan, but it was cheap and I bought it. I bought it for about £1,000. And I bought it with the £40 I earned several times on gigs. I then bought a caravan somewhere so I could leave home, and I put it on a little field and I plugged it in, got some electric, got a shower, got a toilet. I had a place to eat, sleep, and prepare for my next gig. I earned £40. I left home and I got on with it at 16. So I was making money. Doesn't matter whether I'm earning £40, 40 million. I'm earning money and I'm spending less than what I was earning. So I started pretty good, right? I'm building up some money. I'm building up a business. I'm doing what I want to do. I'm going out doing gigs. I'm making money. Now, if I knew then what I know now, I would have done things slightly different. I would have started taking some of the money I'd earned then when I was 16, and I would have started buying the S&P 500 if I'd had access to that, or the equivalent in the UK. And I'd have been putting $5 away every week or every day or whatever, and I would be a millionaire already by now. But I didn't do that. I started to do it, and I was young, and I made some mistakes, and I thought, this is easy. I'm making money. Let's expand. And expanding is not always the right thing. I was making money as an entertainer. I was earning money, and I was living cheap, and it was great. Then I thought, right, now I want to be a big theater show. So now I need to spend some money. I've got to borrow money to pay for people, pay for dancers, employ people. Then things got very expensive. That's when I got into lots of debt. And ultimately, I then declared myself bankrupt when we had the credit crisis, and I had to end the show because not enough people were coming to the show to support the bills I had. So I declared myself bankrupt even before I needed to, but I did it because I knew I could never get out of the amount of debt that was continually spiraling. So I learned that effect, but sometimes growing is not always the right thing to do. Just remaining the small single man earning £40 was quite good. I was making money at that point. I had nice things. It was good. When I got bigger, I actually earned less because I was spending a lot more to be bigger. So fast forward 50 years, I don't know, 30, 40 years. Here I am, 55, living in America. And now I've worked, and I went on, after I was bankrupt, I went around the world as the world piano man. I earned money. I paid off my mortgage, paid off my loans, paid off my cars, got out of debt, got everything straight, whatever. Moved to America, got married. Now I started again because now COVID happened. My business got wiped out. Now what am I going to do? Right. So I've got no income. COVID. My touring days were over. Let's go online. Let's build a TV show just like it was in theatre. Let's do that. So I started building a YouTube channel, which has now grown. It grows about approximately 1,000 subscribers a week, sometimes a bit more, sometimes a bit less. It varies, but that's about the average. And I do it because I love doing it. And I'm in a position now where I've paid my car off. I sold it. I paid my mortgage off. I got my house, got no credit cards. I live minimum, and I'm able to get by on the minimum amount of money. So I started building the channel, made the biggest investment on myself. I worked, knew I loved doing this, knew that this could be successful, just kept going. But let no one tell you that if you do 1 million videos or go for 1 million hours, you're going to hit some magic point. Just like any business, there's no magic behind it, and there's no magic number. When you hit this, it all explodes and all takes off, and you can't go wrong. And if you just kept on doing it, that's rubbish. The only people who say that are the people that who that's their only thing they've got to say is how to grow. They're not providing content like me, talking and going live like this. Their only content is how to be successful. So people watch that stuff so that they become successful. It's an absolute ridiculous nonsense. There's no guarantee just because you work hard that you're going to be successful. There's no guarantee if you make 1 million videos, one of them is going to blow up. Absolutely rubbish. It might. Just like if you buy 1 million lottery tickets, the chances are perhaps increased, but there's no guarantee that you're going to have the winning lottery ticket. It just isn't the case. It's not how it works. But if you enjoy what you're doing, keep going and just take advantage of what you do earn. Now, I don't earn a lot on YouTube, but I earn enough to pay my bills in the UK, my bills in the US, and I have a bit left over to reinvest. That's when you start investing. You've got money, more than you need to live, then you invest. You don't use the stock market or a casino to get rich. That's gambling. That's desperation. And it does pay off for some people. And from time to time online, you will see somebody say, brilliant, I put $50 in Bitcoin and now I'm a gazillionaire, or I put $50 on black in a casino and now I'm a gazillionaire. It does happen, but it's extremely rare, and more often than not, even those that have done it then can't pay their tax bill because they did it again and then they lost the next time. The chance of repeating it are extremely rare, but they're the ones you get to hear about because they're the stories that everybody wants to hear about on YouTube or online or whatever. So you shouldn't follow those as a guide. They are rare, and the chance of that happening is extremely rare, and the chance of you copying it is even rarer. But what you can do is earn money and then invest it. So when you earn your money and you live less than you're earning, you have some amount of money to invest. When I started going solely into the S&P, I had so many people say, you're never going to get rich doing that. You're never going to make money doing that. It doesn't add up. It doesn't make sense. Well, the reality is when Warren Buffett started, who's regarded as the greatest investor of all time, the Oracle of Omaha, he made many mistakes, many mistakes, and lost lots of money and missed out on many opportunities. But no one ever talks about that. They only talk about the successes. Most of his wealth was made after he was 60. And now every 7 years it doubles. And the reality is, it's not because he's smarter than anyone else. He just got older and kept doing the right thing. Now, I'm 55. I'm not going to be able to become the richest man in the world unless I could live to the age of 200. Then I most certainly would. Unfortunately, I'm probably not. So all I need is to achieve what I want to achieve by the time I need the money. Hopefully, I can carry on earning money on YouTube for the rest of my life and never need my pension, never need my investments. That's the reason why we do it after all. But I know what I want to achieve, and I don't need that much money because I'm going to retire in my little house in England, live by the sea, walk to the pub on a Sunday. That's it. I don't need a car. I can get on the bus. I got free healthcare. I don't need a lot. I don't want a lot. I've traveled. I've seen the world. I'm quite happy just walking to the pub on a Sunday, and that will do me fine. So I know my goals. I know what I want to achieve, and $1 million will do it. And I will do that live on the show within the next 6 to 9 years. 9 years is what's predicted at the moment, but as my YouTube channel grows, hopefully it will. Doesn't guarantee it will. I'll have more to invest, and potentially I could do it in 6 years live on the show. So now I've got my money coming in and I'm working at my job and I'm trying to earn money, I'm saving money and I'm not wasting money. Now what do? Well, I could trade and I could buy all kinds of different stocks, but obviously the purpose of my show is not to do that, because I want to be impartial and unbiased, and I want to interview CEOs. So I don't want to trade at the moment. That doesn't mean to say I won't change that, but at the moment I'm taking my money, and I remember the rule that Warren Buffett said: always make money, never lose money. And rule number 2, remember rule number 1. If every single day you make something, whether it's $1 or $1 million, it doesn't matter. If you end up spending less than that dollar or less than that $1 million, and then taking what's left and not losing on it and making some money on it, after a while it will add up and compound. Compound interest, Einstein says, was one of the great discoveries of the modern world. He's absolutely right. And I'm going to show you this now, because people keep saying to me, my portfolio is up because I've got all this money and I just keep putting it in. It's not the case. It's not true. I started with $5,000. For the first year and a half, had no money. For the next year and a half, because we're now 3 years old now, 2 weeks ago, I started earning money. And for the first 6 months, I earned about $1 a day. It's now moved up, but not that much, but it has moved up, and I am paying the bills, and things are moving up. But what I've done, I just keep putting everything in. When I get a dip, I then reapply the dividends, but I always wait for a dip. I was able to buy in a couple of days ago when we had the dip. And I never sell, I never pay tax, I never take profits, and I just keep doing it over and over again, never stopping, never giving up. And let me show you now. If we look at my main brokerage account, on the day, we're up today 0.32. Well, if we look at the S&P today, you will see the S&P is only up 0.26. So I'm beating the market. How am I beating the market? Well, that's because I'm in margin at the moment. So I'm using extra money to buy the stocks. I was at 28,000. I'm now down to 19. Because the stocks are running up, I want distance between what I bought and where the value is. The greater that is, the more comfort I've got, the more security I've got, the more profit I've got, right? So I can live through dips and all the rest of it. I'm now paying down. Every month I get paid. I was at 28,000 a few months ago. I'm now down to 19. And I'm relentless. I don't spend a penny. Every single penny goes in and reduces my margin. Down and down and down. When I get paid on the 21st of this month, I'll have another couple of grand. It will come down to 17. And remember, I'm only paying interest on 15 because the first 2,000 is interest free. That's how I'm beating the market. So I look at the day and I'm up 0.28. I look at the month, I look at the week, I'm up $2,300. Now this week it's cost me about $20 in interest on my margin. About $20 this week. It's about $3 a day, about $3 a day. So $21, $22 it's cost me this week in margin. Because I know there's 10% left in the market this year, it's okay spending 6%, and 6% is over the whole year. Remember, I'm going to be paying this off over the next 6 months, so actually I'm paying 3% to gain 7%. Okay, so it's cost me $21 this week to make $2,300. Admittedly, that is for the entire account. Of course, my margin is only 19,000 at the moment. So that's not all the money I've made on margin, of course, but you get the idea. If I look at the week, look at the month, I've made $4,000 on the month. If I look at the 3 months, you can see I have made $7,000, 10%. Now the year to date, this is important to show this as well, because the year to date was the moment that I sold for losses on purpose. I could have sold at the top at the beginning of the year, but I sold when everything crashed down on purpose. I made the decision knowing everything had crashed down. It wasn't a surprise. I knew it. I was out of the money. I was in losses, but I did it as a tax loss, but I also did it because I knew that was the direction of the show, and that's what I wanted to do. It was the right thing to do. It was the wrong time to do it, but the timing is not important. It's the time in, not the timing. So what was important was doing the right thing, focusing on the future, not on the present, not on the past. It doesn't matter that a few weeks earlier, I had so much more money. It doesn't matter. What matters is where I'm going. So there's the big drop. Then if we look at the year, the 1 year, you can now see I'm up 13%, 9,381. And you know, overall, I'm still out of the money by nearly $30,000. If you look at my overall position, I'm still out of the money because that was all the money I lost with Virgin Galactic. A lot of money, right? It was a lot more than that. A lot more than that. It was down nearly 50 grand at one point, but we've made all that back up since my change of direction. Am I upset? No, because I haven't lost the money, because along the journey, I'm earning more and putting more in. I own more shares. Like I've often said to people, when I was here, let's say I had 100 shares at $10. I now have 1 million shares at $1. So I'm in a better position as long as I don't sell down here, stay in. What's important is my income, and my income gets invested wisely, and my income grows, and my income is growing now. So when people say you can't make money just by buying the S&P 500, let's get one thing straight. Think about this for a minute. Right now, I'm making, they say 10%. I'm actually making about 13%. Let's say in 100,000, right? I've now got 104. So I'm making over $10,000 a year without doing anything. And I'm not paying any tax on my gains. So if I was making more money trading, yes, probably, maybe, if I timed it right. But I'm not trying to time or beat the market. I then have to pay 20% on those gains. Of course, if I do it in my IRA, I don't. But I'm not going to end up with $10,000 profit. I've got to then sell. When do I sell? How do I get back in? Am I now getting back in at a higher point? Have I got to now pay? Am I now on the wrong side of the trade? Remember, this whole game is not one move at a time. It's 10 moves, 20 moves. Think ahead like chess. So you've got to think about that. If you sell, how do you get back in again? I don't have that worry. I don't have that tax bill. I don't have that gain. I just stay in. So I've now got $100,000 earning me 10 grand a year. 10 grand a year? Bloody hell. That's more than I earned in the whole of this year, the last 12 months on YouTube. I'm earning doing absolutely nothing. I'm doing nothing. Just holding. Now, I keep working, I keep earning money, I keep buying the S&P, I keep invested, I never sell, keep buying the dips, trying to find the best time to get in, but don't worry about that too much. Just wait for a little dip. There was one a couple of days ago and I bought in again. Keep doing that. In about 6 years' time, I'll be at $1 million. Imagine that. Just doing what I'm doing, $1 million. Then I'm earning $100,000 a year. I'm now earning a really, really, really good wage. 100 grand a year. And remember, you get taxed differently from money that you earn on stocks than what you do on income. If I go to work and I earn 100 grand after my expenses, let's say I spend 20 grand, I've got 80 grand, I now will be taxed 20% on the 80 grand effectively. It's not quite like that, but that's my profit, right? Whereas if I earn 100 grand a year on my stocks and don't sell, I don't pay any tax. The money is there. If I want to, I could borrow against my portfolio to raise money to buy another house or buy something or whatever I want to do. Or I could get to $1 million and go, right, I'm gonna sell 10 grand a year. That's my income or whatever. or sorry, 100 grand a year, and I just sell 100 grand a year. That's my income. I leave the rest there. Just take a little bit out as we go. Move it into trust, whatever. Lots of options at that point. But the point of this video was the secret to wealth. There is no secret. There is no person who knows more than you. The fact is, a lot of people want to tell you stuff online because it makes them money. It makes them money to tell you stuff. That's it. Tony Robbins, become a billionaire telling you stuff, going to his concert, and this is what it's all about. This is how you get rich. But the same people keep attending the same seminars. If it worked, they wouldn't be there. They'd be at work earning money. So I'm not trying to discourage everyone for watching my channel. I love you being here, and I want you to be here, because I'll be honest, when you're here, I earn money. When I earn money, I invest it. But you also have jobs. You need to focus on earning money, making money, and then the money you've got, you don't spend, or as little as possible, and then you reinvest as much as you can and just stay the course. Simple. There's no secret to life, and no, everyone is in the same position as you. Just because you work hard, just because you do the right thing, doesn't mean you're going to win. It doesn't. I could do the right thing, and then suddenly something goes majorly wrong. Not by the stock market crashing. That wouldn't bother me. I would simply buy more when it dips. I could lose my YouTube channel. This is my 4th attempt at this channel. I had the first 3 get shut down. There was kind of errors and stuff like that, and the YouTube made some mistakes with my account, and it got shut down. That can happen. Well, for that I have my email list. That's why everyone joins the email list. And that's why I have the extra channel, so I have a backup, if you like. But these things can happen. I could get cancer. I could get ill. I might not be able to carry on doing what I'm doing. Lots of reasons. But just because you work hard does not mean you're going to be successful, guaranteed, just because you show up every day. That's not how it works. But you got the best chance if you keep going, keep believing, keep working hard, do what you enjoy doing, spend less than you earn, and then take the money you've earned and just invest it. And you don't have to pick the right stock. You don't have to know everything about everything. You just have to know a little bit about something and stick to it. And you will find that in time, you will achieve your goals and you'll be happy. But you'll only be happy with the goal at the end if you are happy on the journey. I'm loving the journey. I'm loving every day. That's why I can stay in the course. That's why I can carry on. And that's why I'm going to succeed one way or another. Whether I hit 1 million subscribers or get no more than I am today, it doesn't matter, because I'm winning every single day. And I hope that this is a positive message for everyone to do the right thing, work hard, but remember, it's not all up to you. Other things can happen, and stuff does happen. And when it does, just get on with it, because it happens to everybody else. Click above my head for all the links down below in the description, over here and over here. The secret to wealth, there's no secret. Just get on with it. All right. Let's read the comments. MSK's here. I need to address MSK, if he's here. Let me scroll down the comments. Thanks, everybody. Just going through all the comments. Let me catch up. I see your comments, Fusion. Yes. Space going down. Rocket Lab going up. Zap still on watch. Rocket Lab going down again. SNGS sort of spotted that one. Well done. Floods on the way to Michigan. Wow. Tell the story, Martin. So what's going on with space? Any update? Nothing to say other than it's going down. Not sure Biden knows what he is saying. I get the feeling it's his wife pulling the strings as she loves power, says Team Fusion. Hi all from my summer vacation in Rhodes in Greece. 37 degrees. Lovely. Well, Henrik, lovely to have you here. Wow, Palantir. Martin, my eToro account manager got me free. MSK, here he is. MSK, at the beginning of this video, we talked about Leah today, what happened to Leah, taking her to hospital yesterday. And you, and I told everybody about it and thanked everybody for their support at the beginning of this video. So if you want to rewind it, please do. I want you to hear what I said. I also wanted to thank you because you gave £100, I beg your pardon, £100, which is like $120 super chat yesterday. And but on behalf of Leah, I want to say thank you and tell you what we did with the money. So Leah had to buy medication for aftercare treatment. So I used the money to buy that. Also, I used the money to buy some food on the way home. So from the hospital. So that's what we did with that £100. So just know that Leah's aftercare, she has all kinds of bits and bobs that she's using today. That was paid by you. So thank you, MSK, for that. And also I thank you because we got food on the way home as well. So there you go. That's where the money went. Thank you very much for that. It's very, very kind of you. Martin, my eToro account manager got me free VIP tickets to the O2 Arena, watch heavyweight boxing live at the end of the month. Very nice. Thanks, bro. Usually reject the offers, but I am a huge boxing fan, so took it up. That's great. Very nice. Nice, MSK. See what goes round comes around. I always believe that. Good karma. I believe that. Thank God to be born in America. Says Smoky Fats. Hey, Sid. Yes, she said Smoky Fats. How do you find eToro? I don't like it. Hi, never thought of it that way. Hi, Mike. Great time to buy back into APLD. Got to listen to more often. Got to listen to me more often, MSK. I got a job at 19 with a 5% match. Very nice. I have never had a bad experience with them, plus withdrawals as fast. There you go. Great to hear. I joined the other day. I haven't uploaded money as of yet. Well done on the tickets, Team Fusion. Great. Are you in Discord chat, MSK? Yeah, but I don't use it often. Cheers, buddy. It was a great weekend. I could have posted hundreds of photos. SNGX Holt. Plug news in links for YouTube. Okay, I'm on it now. Let me get through the comments. APLD, sell off, great time to buy. Jerome Powell's speech at 10. I won't be covering that because I'm doing a one-on-one video call with Team Fusion. President Biden announced plans to reclassify cannabis to a less restricted category with, yes, we know that's coming. We know that's coming. That's all good stuff. APLD, Green Gang, get to the carpet, get to the carpet. Clear to taxi. Tata singing Boulevard, Broken Dreams. It's a green day. Let's have a look at Tesla right now. Oh, yes, at 1.73. Nice. Riot platform is down and expected to run today. They are going to cut rates today, I bet. I have said 100% rates are coming, cuts are coming in September. I've said the summer of 2004, 18 months ago, and I've stood by that, and that's why I'm fully invested with the with margin. Reading all the comments. You said Tesla was going down. Yeah, still believe it will. I did. Yes. Selling training courses. We provide it all for free. You don't need to pay for a training course. Look at SPCE. Let's have a quick look. Yeah. I haven't, yes, SNGX. SNGX. Should I be looking at that, Ed? Don't forget that you also need to be blessed. We talked about that yesterday. But I will now. Stacey, I invested. Tilray stock. Jerome Powell's speech. I can't do that. I'm speaking to one of our gold members. Powell just said he does not want to hold rates too long as it will jeopardize. That's right. Leave my Tesla alone, please. Yeah, because I control it. Whatever I say goes, right? If I say it goes up, it goes up. That's it. Right. Let me have a look for a minute. The speech is at 10 o'clock. No, I'm not going to cover that because I'm doing a one-on-one call with Team Fusion. Right, what's the time now? 9, 10, 11, 12, 1, 2, 3. 3, I've got a 10. 3, 4. Right, I think I'm going to have to get off. I'm going to come back early. I'm doing 2 reviews today. I've got to get off because at 10 o'clock I've got to be available for Team Fusion, and I've got to go and see Talia now and also make some phone calls. So I'm going to get off now, I think. And Team Fusion, I'll see you on that link at 10 o'clock in 45 minutes. I'm happy to delay the call. Okay. I don't know. Is it going to be broadcast? The Chair Powell testimony, is that going to be broadcast? Let's have a look. Fed Chair Powell testimony. Let me just have a look. We could postpone till tomorrow. I don't know if that'll be broadcast. Okay, you can delay an hour. Okay, brilliant. In that case, then, Team Fusion, let's make it 1 hour later, 11 a.m. Central. Okay? No, let's do it at 11 a.m. 11 a.m. Central. All right? Let's do it 11 a.m. Central. So 1 hour later. All right? I'll just confirm that with you on a message here. Let me go to my messages. Okay. 11 a.m. So that's 1 hour after we said. That's 1 hour and 45 minutes. 11 a.m. Central. I've just done that. Fed Powell live. Okay, 11 a.m. Central. Yeah, I don't think Fed Powell is talking at 10. If he is, I'll cover it after taking care of Leah. Let's have a look. Perfect. Okay, let me see if he's talking. Fed Chair Powell. Testimony. Is it? Let me see if it's being rebroadcast. The stream is slated to that's 9 a.m. So that's 9. Okay. Okay. Okay, it's here. So I've got a broadcast feed. Fed Chair Powell. Okay, that's 10 a.m. Oh, hang on, they've changed it. It's 9. It's not 10 a.m. It's now.
And folks trying to achieve the American dream. The stakes are high, and that is why we have to get this right. You've heard me say this a number of times, but it bears repeating. We need transparency in your rulemaking process, as this enormous. Therefore, I'll repeat it one more time. You need to restore confidence in this rulemaking process, pull the existing proposal, and have a complete restart. And then, when the data has been analyzed and is available for the public scrutiny, reissue an appropriate proposed rule following the requirements of the APA. I look forward to your opening statement and having a chance to have a conversation afterwards.
Thanks, Senator Scott. Mr. Chair, welcome. Thank you for your service and for your testimony today. Please proceed.
Chairman Brown, Ranking Member Scott, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Fed's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll gains averaged 222,000 per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54, so-called workers in their prime working years, and a strong pace of immigration. As a result, the jobs-to-workers gap is well down from its peak and now stands just a bit above its 2019 pre-pandemic level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. A restrictive monetary policy stance is helping to bring demand and supply conditions into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Federal Reserve with operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Mr. Chair. And the senior member of the committee will begin the questioning. Senator Reid.
Thank you very much, Mr. Chairman. Former President Trump has indicated that he would propose, if elected, a substantial increase in tariffs of between 10 and 60%, and by doing thus, eliminate the federal income tax. First, on the question of what would be the impact of tariff increases on prices, consumers, and the economy?
Thank you, Senator Reid. So I'm going to say that we go very far out of our way not to comment on campaign-type information. We just don't do that. We also don't comment on trade policy. We have really specific and important jobs, and we try to stick to those.
Well, I'm glad I allowed you to establish that principle up front, Mr. Chairman. But let me opine a bit. 10% increases in tariffs is going to have an effect on prices in the shop aisle. It's going to increase them because they'll be passed on likely. 60% tariff increases are significant. And in fact, I've been told that to replace the income tax, you would have to raise tariffs across the board 70% to make up for the loss of the income tax, which would, I think, create huge economic problems. I respect your impartiality and your neutrality, but the numbers don't seem to add up to anything that would help the country. Let me switch to something else that might be more within your line of response. You said in your opening statement that the labor markets appear to be in a better balance. And that's one of the key factors to judge whether interest rates can be raised. I must say I'm concerned a bit that we're not on a very faster track to decreasing interest rates from the Fed, and because of the better balance you cite. Could you comment on that, Mr. Chairman?
Sure. So the most recent labor market data do send, to your point, a pretty clear signal that labor market conditions have cooled considerably compared to where they were 2 years ago. This is no longer an overheated economy. This is an economy, as I mentioned in my opening remarks, that is more or less back by most measures to where it was before the pandemic. And that was a strong labor market, but it was not an overheated labor market. So I think the upshot of that really is that we're well aware that we now face two-sided risks and have for some time. But now, the labor market appears to be fully back in balance. We know that if we move too quickly, we risk unnecessarily hampering economic activity and possibly interfering with the ongoing expansion. We know that if we move too slowly, that we may undo the good we've done. Well, actually, it's the other way. If we loosen policy too late or too little, we could hurt economic activity. If we loosen policy too much or too soon, then we could undermine the progress on inflation. So we're very much balancing those two risks, and that's really the essence of what we're thinking about these days.
But the direction seems to be going towards lowering interest rates at some point, we would hope. That might be a wish rather than a direction.
I think if you look at the last summary of economic projections, I guess I would say it this way. It doesn't seem likely that the next policy move would be a rate increase. We don't take things like that off the table, but that does not seem the likely direction. The likely direction does seem to be as we make more progress in inflation and as the labor market remains strong, we begin to loosen policy at the right moment.
Thank you. Just 2 weeks ago, the Supreme Court handed down 2 decisions that impact every federal regulatory agency, including the Federal Reserve. They overturned the Chevron case, which had eliminated judicial deference to agency decision-making for many, many decades. And they also dramatically extended the statute of limitations under the Administrative Procedure Act. What is your judgment is the cumulative effect of these decisions on the Federal Reserve? More broadly, what does it mean to the economy if virtually any regulatory decision the Fed makes can be second-guessed by a judge? What position are we in now?
So we're as an institution very focused on reading the actual letter and intent of the law and following it carefully. This is a strong institutional value that we have. Those are brand new decisions that just came down, and we're really in the process of just studying some. I don't have anything for you on them, but we will, of course, follow the law as the Supreme Court as the Supreme Court has read it, because that's their job.
Well, thank you, and I concur with compliance with the law. But when you do your analysis, and if it is detrimental to your ability to regulate the banking industry in the United States, I think you have an obligation to make that public. Thank you, Mr. Chairman.
Thank you, Senator Reid. Senator Scott from South Carolina is recognized.
Thank you, Mr. Chairman. Chair Powell, we've heard a steady stream of commentary that there will be changes to Basel III endgame proposal. That can be seen certainly as good news. Some reports say it could be finalized as soon as August. Others say you are circulating a term sheet for a revised proposal. Through it all, this proposal will have outsized impacts on our banking system, from big to regional to our U.S.-based foreign institutions, as well as impeding access to credit for consumers. So even though you yourself have said there will be broad and material changes, I believe this proposal is flawed, both in process and in substance, and should be withdrawn. Do you agree, and will you commit to withdrawing the existing proposal and issuing a new proposal with a robust notice and comment process?
Let me update everyone on the status of all that. So over the past several months, we've had, in fact, Vice Chair for Supervision Barr has held a series of discussions with the other bank regulatory agencies around potential changes to the original proposal. I'm pleased to say that we've made quite a bit of progress on those and are very close to agreeing on the substance of those changes. And I can't really be specific because nothing is agreed until everything's agreed, so I won't have a lot of specifics for you today. The question where we're continuing to to try to make progress is that of process. So it is my view, it is the strongly held view of members of the board that we do need to put a revised proposal out for comment for some period. And the reason is, when there are broad and material changes, that has been our practice. We don't see a reason to deviate from that practice. It seems to be consistent with past practice and with the Administrative Procedure Act. So that's very much what we think. And we're working through that question with the FDIC and the OCC. We haven't reached agreement on that, but I'm very hopeful that we will. We're prepared to move forward when we do reach agreement on that.
Well, I appreciate most of your response there. I do want to discuss one aspect more of Basel before we move on to another topic. I find it very concerning with how much of this proposal, this process, appears to have been done behind closed doors. The Fed, the FDIC, OCC proposed the Basel III endgame last July. Then in October, the Fed began the collection of data to conduct a quantitative impact study on the cost of Basel III proposal, a study which I will note should have been conducted before any proposal was ever issued. Move forward to January of this year, Vice Chair Barr committed to a public comment period once results of the study were published. We are still waiting to view the results. Keep in mind, all the while, we're hearing rumors that the Fed is working on revising its proposal and moving towards an updated version. Please help me understand, how will the Fed revise or reissue a capital proposal before receiving public comments? Basically my question.
Well, as you know, we have received extensive public comments, and we've also evaluated the quantitative impact survey that you mentioned.
Yes.
And so the idea would be when we do reach agreement with the other agencies fully, that we would publish the proposed changes and also the quantitative impact survey, and also the effects that the QIS suggests that the changes would have. So we'll put all that out for comment again for a period of time, and then having had yet another round of comment, and we can then move toward finalizing. That's basically the broad strokes of how I would see this moving forward.
And how long do you see that opportunity for public comments?
So it would be meaningful. I mean, it might be 60 days. We don't need to it doesn't need to be a long one. But, before we do that, there's a lot of work that needs to take place, before you actually put out the revised proposal. Quite a bit of work. So it will take some time, and then we would put it out, and then there would be, I'm just taking that number, 60 days of comment, and then we would get the comments back, and there would be another period of evaluating the comments, and only then would you go final. So there are a number of steps here.
Yeah, thank you. Well, just final point as I'm running out of time here. I think Senator Reid made the comment about the Chevron case and the impact that it could have, certainly curtailing, from my perspective, the regulatory state. The necessity of a cost-benefit analysis on new regulations that will impact the economy, I think, is quite helpful. In the 1,000-plus pages of Basel III, I think there were about 20 pages that reflected some kind of cost-benefit analysis approach. I really hope that we see more of that going forward.
Thank you.
Senator Tester from Montana is recognized.
Well, thank you, Mr. Chairman. Thank you for the courtesy. Chairman Powell, good to see you here today. Appreciate your work. Look, regardless of where I go in the state of Montana, housing is a big issue, whether it's Billings or Butte or Bozeman or Busby or Big Sandy, it doesn't matter. Larger towns to medium-sized towns to small towns, housing is a huge issue. And I think it's a huge issue all over the country, and correct me if I'm not correct in that. And I was wondering how the housing challenges fit into the overall economic picture that you're seeing.
So we do pay a lot of attention, and I would agree with you. We have significant housing issues in the country, and we had them before the pandemic. Certainly, the pandemic has created new distortions, and monetary policy works through interest-sensitive spending. There is no more interest-sensitive spending than buying a house and having a mortgage. So, for sure, our tighter policy is having an effect on economic activity in the housing sector. But I would also say the best thing we can do for housing is to succeed in getting inflation down to 2% on a sustainable basis so that rates can come down so that the housing market can get back to what was the pre-pandemic normal, which is to say still a housing shortage, but not dealing with the kinds of specific things we're dealing with now.
So let me drill down a little bit. I'm speaking not necessarily from a housing cost interest, and you're correct on the things you just brought up. I'm speaking more from a standpoint of economic growth, in that there are plenty of small businesses, schools, hospitals, Main Street businesses that can't hire people, they can't expand because there simply is no place for them to live. How does that fit into your economic outlook metrics? Because I think it's, from my perspective at least, I think it's limiting the opportunity for expansion. It's limiting the opportunity for entrepreneurs, just business startups. And does that fit into the economic picture that you look at?
So our mandate is for stable prices and maximum employment. And again, I think for housing supply, the best thing we can do is get inflation under control so that rates can come back down, so that we can have a more normalized set of rates and a more normalized housing system. But I think policies to increase housing supply are really not so much in the hands of the Fed, they're in the hands of legislatures, state and federal.
Do you believe that if we were to put forth some housing incentives, whatever they may be, that could have if those incentives resulted in more affordable workforce housing on the market, that would have positive impacts on the economy?
These are questions for you, but I would say this, that I'm aware that housing is in short supply, and that for many it's a critical need for the workforce.
Okay.
And so more of it is better. But as to where the fiscal policy how you should prioritize that's not up to us.
Look, I want to talk about the independence of the Fed for a second, because I know that you are a strong supporter of independence, as am I, and political influence I don't think helps with monetary policy in the country. And so give me your perspective at least on why the central bank independence is so critically important.
Thank you. I'd be glad to. So essentially all advanced economies have adopted a policy of central bank and operational independence. And that just means that we make our decisions, we're instructed to make them without taking in extraneous factors, one of which would be politics. And the record is pretty clear that that's a good it's a good institutional arrangement that serves the public well. And we just want to stress, as we do periodically, that this is an institutional choice that we make as a country, and that as long as it's seen to serve the public well, it's a good choice. We think so.
Okay, on advanced economies, there's some that talk about the economy of this country not being in very good shape. From your perspective, tell me how the economy of this country is doing compared to other advanced economies that have central banks.
So I'm in lots and lots of international discussions as part of my job, and the story for the last 2 years has been just how exceptional the performance of the U.S. economy has been, and that's not a secret. Clearly the U.S. economy has performed very well compared to sort of our advanced economy colleagues.
Is there any country in the world with a central bank, any advanced economy that's performing better?
Better as a central bank?
Any economy that's an advanced economy that has a central bank that performs better than us?
None comes to mind. As I think of the majors, the answer would be no.
Okay, thank you.
Thanks, Senator Tester. Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman. Mr. Chairman, first of all, thanks for coming in again and visiting with us. I just want to focus on two specific items, and I'm going to start with the Basel III endgame discussion. I think Senator Scott did an excellent job of kind of laying out the concerns that many of us have had with it. I would like to go back into just one particular issue, which I think a lot of folks out there that follow this, and I know it's technical in nature, but let me just ask a specific question, and you can kind of pick it apart for me, please. Both you and Vice Chair Barr have confirmed that there will be material changes to every risk type outlined in the proposal. Since there will be significant changes, do you believe where the agencies have landed now would be considered a logical outgrowth of the original proposal from last summer?
For those people who are not familiar with, that's the legal test for, that turns out to be if it's a logical outgrowth. If it's not a logical outgrowth, that would legally require reproposal. And I don't want to make the legal judgment. I will just say again, from my standpoint, my view and strongly held view of some of my colleagues on the board is that it will be appropriate for us to put out the changes again for a period of comment, just because it's the right thing to do. It's what we would do typically in a situation where there are, material changes to a proposed rule.
Do you feel that you have a consensus in the board to allow that to move forward in terms of an additional comment period?
Yes, but of course we have to get the FDIC and the OCC. We're in discussions with them to work on something that would meet that need, and we have to get their agreement too.
Assuming it sounds like that's the path that you would like to go down.
Yes.
If that were the case, would it be fair to say that we'd probably be looking at final determinations or recommendations for a Basel III endgame proposal probably into next year before it would become anything of a final determination?
I think that may be right. It's that's something like that could be right. Yeah. I mean, it's hard to be precise. We would put it out. It takes some time to write this stuff up. Then you put it out for comment. Then you get the comments. Then you read the comments. Then you write the final rule. Beginning part of next year is a good guesstimate.
The only reason why I push is because there are so many folks directly involved with this, and the impact on our economy here and with a lot of our financial institutions. This is a significant change, and it's one that a lot of people are following. So I'm trying to get you to get into the depth of this as much as possible, and I thank you for that. I'd also want to go into one other area, and once again, this is something that you and I have had visits about in front of this group before, but I want to talk about what the parts of inflation are and what parts you can control and what parts, as the Fed, you really can't control. The demand side of the equation on inflation is the part that you have the tools to work with. But there is the supply side of the equation, which is still out there. And I want to just lay this out because as we do this in this setting, it naturally becomes political in nature because one of the starting points that we talk about is when this administration took office and what happens with supply side issues at that time. And as I work my way through this, I just want to share the concern that I've got. And then I recognize you don't want to be political in it, but I want to lay this out. And then I want to talk about what you can control and what you can't control with regard to making changes on inflation through the processes that you have. When President Biden took office, gasoline prices, since President Biden took office, gasoline prices have risen over 54%. Energy prices have risen 41%. Fuel oil prices have risen 37%. Now, I can go on, but you understand what I'm saying is energy has increased substantially. And I think one of the reasons for this has been additional demand as we've come out of a pandemic. But the other part of this has been whether or not investors really want to go back in and invest in traditional energy resources after the president made the specific determination to cancel the Keystone XL pipeline on the day that he stepped into office. When he did that, he sent one heck of a message to investors about traditional energy and investing in traditional energy in the United States, and the fact that a multi-billion-dollar contract or contract could be canceled with the stroke of a pen. Now, my question to you is, what percent, or has there been a discussion about what percent or what amount of the inflation that we've seen, over 20% increase in terms of affordability for a lot of our products, how much of that is attributable to the demand side and how much of it really is attributable to supply side challenges that we've seen in this country?
That's a question that we've thought about a lot, and any attempt to reduce that to a precise number would be inappropriate because it's so uncertain. But I think we can say, I believe strongly, there's a significant demand element and there's a significant supply element. And we've seen the supply side heal so much over the course of the last year or so, and we clearly see that that's contributing to lower inflation. We also see cooling demand, for example, in the labor market. So the two forces are working together. I can't really break it down. It would be such an imprecise estimate.
Just simply an acknowledgement, though, that it is both demand.
It's both. It's definitely
and
both.
it is supply.
It is both. Yeah.
Thank
for
you.
sure.
Thank you, Mr. Chairman. My time has expired.
Chair Powell, unemployment has risen by 0.5 percentage point over the past year. The number of job openings has dropped almost 50%. The hiring and quit rates are now below pre-pandemic levels. I'm concerned that if the Fed waits too long to lower rates, the Fed could undo the progress we've made on creating good paying jobs. Full employment is part of the mandate, as you say over and over. How are you assessing the risks of higher interest rates on the labor market?
So I completely agree with your characterization. The latest data do show that we've had considerable cooling in the labor market, and we're very much aware that we have two-sided risks now, as I mentioned earlier, and we're determined to balance those as best we can. We want to see more good inflation data, and we also want to continue to see a strong labor market. And those two things are equal under the law. We have this challenging thing to balance them, but we're very much conscious that that is our job, and we're trying to do that.
Well, and you know that if unemployment trends upward, you must act immediately to protect Americans' jobs. Workers have too much to lose if the Fed overshoots inflation target and causes a completely unnecessary recession. We will say that over and over and over again. I think you understand that. Housing, higher interest rates are making housing more unaffordable. Higher rates are supposed to lower cost, yet housing prices continue to soar. By keeping rates high, the Fed ignores the economic reality of the millions of Americans struggling to make ends meet and get ahead. Let me ask you 3 quick yes or no questions, if you would answer that way. Since late 2022, when the Fed began raising rates, has the volume of housing sales decreased?
I believe it has, yes.
Since late 2022, has the median home price increased?
I believe it has.
Since late 2022, have monthly mortgage payments become
a fingerprint of a challenge? It's not exactly like the stressors that we had back in the 70s, but what can we learn from the decisions, what I think are arguably the wrong decisions made back then when we were dealing with high unemployment and high inflation? What did we learn?
I think the number one thing we learned was that it's up to the central bank to take it on and stick with it until it's done. And that doesn't sound controversial now, but it actually was back then. And so people didn't really get in there and get it done, and inflation kept coming back. I also think there are significant differences this time to the questions a minute ago. This is a combination of a supply side that we had very significant supply shocks along with big demand shocks from the reopening of the economy and from all the other things that happened. So I think we have to, each one of these things is different in its own way. We try to learn the lessons of history, though.
Do you agree or disagree? Any disconnect between inflation and inflation expectations from the 2% target should be addressed now and not at a later time?
Absolutely.
I like that answer. I want to go to something different. I'm trying to go into a lightning round now and finish on time. We've seen the 2024 stress test results for the U.S. banking system. It looks like to me, by every objective measure, we've got a banking system that's on strong financial footing. Do you agree?
Yes.
One last thing is the Fed considers making broad and material changes to the Basel III proposal, back on that one. Can I urge you not to overlook the second order issues, important FBOs in certain regionals, to ensure that the banks are not unduly influenced? If the current proposal, for example, the outsized operational risk costs were high, are we going to take care of that in any sort of reproposal?
Let me just say we're very conscious of the comments across the spectrum: foreign banks, domestic banks, small, medium-sized banks. Everyone's going to get heard carefully as part of this process. That is our obligation.
Okay. And I think in response to Senator Round's question, you did indicate there's probably, because of the nature of the likely changes from what Mr. Barr expected to what may ultimately come, we are going to open it up to comment again.
that's the strong view of the Federal Reserve. We're working on that question with the FDIC and the OCC to try to find a path to do that. But
Very good.
from our standpoint, that's essential.
I think it's a strong view from at least several members on this side of the dais here. That would be very, very important, because I think it's going to materially change. Thank you, Mr. Chair.
Thanks, Senator Tillis. Senator Warner of Virginia is recognized.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you again, coming this late in the questioning. I'm going to at least hit a couple of the items that my colleagues have otherwise already hit, because I make sure it's noted that I raised them as well. First of all, I want to agree with the chairman. You know, I probably hear more on housing and housing affordability than any other issue, and I agree with the chairman. I know we've discussed this around a rate cut, and I understand most of your answer, but I still want to add my 2 cents here. We've got to find a way to start bringing mortgage rates down and let people get unlock that housing market. And again, we've discussed the rate cut issue, and I know you've got to navigate that, but I hope it's sooner than later. I will not recap what I've done in the last couple hearings with you, but I do think the discount window proposal that I've gotten, that I know you're working on, you know, before we think about additional regulations, and we do need in some cases, I think the discount window is an underused tool, was one of the original tools for the Fed. A lot of my colleagues have talked about quantitative easing, Basel III endgame. I do hope when we get the revisions that we'll see the quantitative analysis that, again, Senator Tillis already raised and other colleagues have raised. I also hope that one of the questions I raised in my March letter to you was, you know, making sure any new regulatory structure, how it intersects with existing regulatory structure in terms of market risk, credit risk. And I, again, hope that we will have that as the revisions come out. I think one of the things that this debate around Basel III raised was that it is, my understanding at least, looked at, you may be all looking at revisions to liquidity standards as well, and wanted to see what you could say about that and whether that part of those standards are under review and what your thinking is.
Yeah, and I think that actually connects to the Silicon Valley Bank questions as well, where I think there seems to be a need to update assumptions about liquidity, and that's a separate proposal that we're also working on, and you know, very important. I think we saw how fast that run was. It was just exponentially faster than prior runs. That's the new world, and you know, that's some estimate of what that world is baked into things like the liquidity coverage ratio, for example.
Right, and wasn't that the case, you know, if you had 25 cents on every depository dollar leave in 6 hours, no matter what the capital standards are.
Yeah.
And one of the things, I guess, you know, there was a lot of talk after SVB that we need to think about internet-driven runs. A lot of us raised concerns. Candidly, I'm not sure I've heard any good proposals. So whether it comes from you guys or from folks listening, how we think about this new internet-driven world. And frankly, I think some of the irresponsible behavior by some of the folks that were major depositors in SVB who in many ways shouted fire in the crowded theater, and we've not seen any action there. So I would welcome additional ideas as well. And that kind of brings me to my last questions around supervisory reform. I know the GAO criticized the Fed's supervisory procedures in the role they played in the 2023 failures. It is a whole brand new world. Are we going to look at, will your changes to supervisory standards be comprehensive? Will they be one-off? How do you think about that in light of the GAO report and also in light of just the SVB and the few of the other failures we saw last year?
Vice Chair Barr is, who's Vice Chair for Supervision, is leading a process of looking at the way we supervise banks and thinking about how we can be faster where it's appropriate, more forceful where it's appropriate. And I think, you know, they've taken a pretty deep dive and tried to learn these lessons and then implement them in a way that is appropriate. So that's a big project going on at the Fed right now, which really Vice Chair for Supervision leads.
I think I remember lots of conversations with the chairman, with you, with the FDIC, and that Thursday through Sunday, and I think the solution you guys came up with, the administration came up with by Sunday night was a good one, but they were a pretty scary 3 or 4 days there, and it did seem like the process, I don't know completely how you get fully ahead of that, but I firmly believe that there should have been a clearer early warning system and trying to make sure that we wouldn't be in that kind of crisis situation going forward. And again, I would strongly encourage any additional thoughts on this technology risk and how we get that right. Thank you, Mr. Chairman. Thank you.
Case in order, Senator Kennedy of Louisiana is recognized.
Thank you, Mr. Chairman. Mr. Chairman, our economy is slowing, is it not?
Yes, although still growing at a solid pace.
Our unemployment rate is rising, is it not?
Yes, it is, although the labor market is still strong.
Our labor market is slowing, is it not?
Yes, but I'd say unemployment is still, is still low by historical standards. But yes, it is. We've seen cooling. Yes.
Mm-hmm. And I was looking at the recent jobs numbers. I know you've glanced at them too. About 3/4 of the net new jobs that were created in June were in government, healthcare, and social assistance. What does that tell you?
So that's a concentration. You'd rather see broader job creation than that. Those three areas have, in some reports, they've been, as it was this time, they've been the predominant creators of jobs. That tells you that job creation is becoming less broad in the economy and it's narrowing.
It tells you that government's creating those jobs, doesn't it?
Well, it's government. It's also in-person services. It's also some of it's government.
Manufacturing's been flat.
Yes, manufacturing's not creating a lot of new jobs these days.
Information technology shed jobs over the past 2 years, hasn't it?
I don't know.
Leisure and hospitality jobs have slowed to almost a trickle.
So that's a place where there was a desperate worker shortage, and they've done quite a bit of hiring, but they're catching up now.
I mean, 3/4 of the jobs that are being created in our economy can be related directly or indirectly to our spending deficits, can't they?
In this report, in this single report, I don't know that healthcare is really government spending. I mean, that's something people are consuming.
Where do you think these hospitals get their money?
They may get it, but I mean, people are not. The spending on healthcare is not necessarily directly related to deficits. Is my point.
I would disagree with you. I mean, here's my point. We talk a lot about expectations in terms of inflation. How if we expect there to be inflation, we'll get inflation. It seems to me that consumer expectations play a bigger role in the economy than we cede to them. Most of our economy in America is consumer driven, is it not?
Yes.
Unlike, say, China, which is manufacturing driven.
Very much so.
And I listened to you cite the statistics about the economy, but most Americans don't feel good about the economy, do they?
No, and we don't tell people how to feel about the economy.
I mean, isn't it a fact that most people, if you ask them to define Bidenomics, they would say that's easy. We get to pay more to live worse.
I wouldn't touch
you don't want to answer that
a sentence with that word in it.
Yeah. Yeah. I mean, we can pretty this up all I guess my point is, and I know you're going to do this anyway, but I'd be really careful with this economy. I mean, people just don't feel better off today. And one can marshal a persuasive argument that, well, you should, compared to Europe or compared to China, compared to Canada. But You know, feelings are feelings. People don't feel good about this economy. And it's primarily because of inflation. Let me use my final 30 seconds to ask you. I listened to my good friend, the chairman, give his opening statement. Do you think inflation was caused by corporate greed?
I hate to comment on something the chairman was speaking about.
Oh,
but,
go ahead.
Well, so I will just say, we see at the Fed, we see inflation as when there's an imbalance between supply and demand. And we use our tools to work on the demand side of that and bring it back into line with supply.
I got 2 seconds. So when are you going to lower interest rates?
I'm today not going to be sending any signals about the timing of any future actions.
Thank you, Mr. Chairman.
Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair. Welcome, Chair Powell. It's good to see you again. I want to follow up on kind of the line of questioning that Senator Tester was on a bit ago. He was talking about how the U.S. economy has been outperforming other advanced economies around the world in terms of growth rates, in terms of unemployment, in terms of inflation, getting inflation under control, though I think we obviously can all agree that we're not, at least from my perspective, we're not done yet, and we don't want to rest on our laurels, but I'm wondering if you could share what you think that we have learned from this experience. What have we done right, and why is it that we are doing better than some of the other advanced economies in the world?
I think that it's down to the fundamental strengths of our economy. So, as you may know, European economic officials are very, very focused on this question. They really, it comes up in all of our discussions. Europe has seen productivity increases of about 1% a year for 40 years. We've seen 2%. If you take a number and compound it at 1%, then compound it at 2%, the difference is just enormous after 40 years in terms of incomes and living standards. And their question is, why is that? Why is that? And the standard answer that Americans tend to give, and that I would give, is it's down to, more flexible labor markets. They, in the pandemic, people they stayed in their existing jobs. In the United States, we had people changing jobs at record levels, and that's the kind of thing that adds to productivity and it contributes to rising living standards, going back to school, getting skills, and things like that. Another one is our financial sector. We don't just have banks. We have a highly developed ecosystem of financing sources that will fund early stage investments. Banks are really not set up to do that. They're prudentially regulated. And so those are some of the things. And I think we just have these natural strengths as an innovative, more flexible economy. We can grow faster.
I appreciate that. I think sometimes there's a tendency to sort of trash our economy and to sort of say, oh, we suck. And actually, I think that there's great resilience in our economy. I would argue that it has also to do a lot with the incredible resilience of our workers and their creativity and their talent and the training and the education that they have. And I think I would also argue, though I wouldn't expect you to make this case, that the way in which our federal government responded to the pandemic in order to make sure that people weren't evicted, that they still had money to pay their bills even when they weren't able to work, meant that overall our economy, survived and was ready to kind of be off to the races when we emerged from the pandemic. But Chair Powell, I'd like to ask you a question, something that you and I have talked about, I continue to be thinking a lot about, which is the commercial real estate risk that we have in this country. I think particularly for office space. We know that has been under strain the last several years. The sector has remained largely stable, but we are hearing about some additional default risk. And one thing that I'm noting is that there's some expectation or concern that may fall disproportionately on smaller banks. I think that commercial and regional banks hold an estimated 2/3 of all the commercial real estate loans in the country. And so unlike larger banks, these smaller institutions might find it a little harder to deal with this. So could you discuss this with us? Could you tell us a little bit about how you see this risk and particularly whether this poses some additional risk that we might be seeing more concentration in the banking sector as these smaller banks are maybe under more pressure?
Yes, so this, to your point, this is a risk that has been with us and will be with us for some time, probably for years. And banks need to be, honestly assessing what their risk is. They need to be assured that they have the capital and the liquidity and the systems in place to manage this risk. The stress test that we apply to the largest institutions stressed commercial real estate pretty hard. And again, the conclusion is that the large banks can manage this problem. And most small banks can too, but it is in some smaller banks that tend to have that local concentration in commercial real estate. And we're in touch with those banks. The supervisors and regulators are in touch with those banks and making sure that they can manage them. And it's going to be an issue for many banks, but it's one that we're trying to work through, one that we're very much aware of. And again, it'll be with us for some time.
Thank you. I think so much about the importance of these small regional community banks in small towns, even big towns in Minnesota, and how important it is that, in my book, that they can stay independent and better serve their communities in that way. So I worry about this risk. Thank you, Mr. Chair.
Thanks, Senator Smith. Senator Butler of California is recognized.
Thank you, Mr. Chairman. Chairman, good to see you.
Good to see you.
And I am going to make you do the whole last 5 minutes, since I'm the last one for today. You'll recall the first time that we spoke, I tried to engage you around 3 specific areas. One was how the monetary policy impacts the quality of life for young Americans in the future and the work that you are doing there, the space of climate risk, and what I see as potentially a future challenge down the road, and that is the state of commercial real estate. You and I have had that conversation before, and no surprises today. I'm going to stick to those 3 topics. Somewhat related to questions that you've been asked before relative to the housing market, housing affordability, and interest rates. I want to narrow the scope just a little bit to ask about those issues and challenges impact, again, the quality of life for America's next generation. Given the severe shortage of affordable and available homes to buy, coupled with high interest rates, young Americans are continually unable to afford homes and are pushed into a rental market, driving rental costs up. So there is sort of trickle-down impact here. A recent Washington Post analysis showed that Gen Z is spending 31% more on housing than their millennial counterparts were 10 years ago after adjusting for inflation. How do you view, that was a long lead in to just ask the question, how do you envision or view the interest rates of today and the monetary balancing, policy balancing that the Fed is doing on contributing to the future generation predicament if we are to extrapolate the conditions of today?
So our job, of course, is the whole economy and inflation for the whole economy. And the absolute best thing we can do for younger people is to restore price stability so that as we benefited from, I graduated from college in 1975, near the end of the big inflation period. So during most of my adult life, inflation has just been not a factor. And that means, stable interest rates, relatively low interest rates. We want to get back to that. And that is what the Fed's job is that we're not supposed to look at the housing market as separate from the overall economy. In the meantime, though, there's no question that higher interest rates are making it harder to buy homes in the short term, but in the longer term, this is the best thing particularly for younger people who are not yet in the housing market.
Let me sort of in line with that community, constituency, population, and definitely aligned with the concerns of my state that's actually facing some severe climate impacts, just as we speak with wildfires and our colleagues and fellow Americans in Texas and the impact of the hurricane. I wanted to pull in your sort of thoughts about the Fed pilot on the climate scenario exercise. In May, the Fed conducted a pilot climate scenario exercise and asked the 6 largest U.S. banks to examine their balance sheets and how it would be effective if a large hurricane hit the Northeast. They reported facing data gaps on property characteristics, their counterparties and insurance coverage. How does the Federal Reserve intend to invest in expanding the modeling resources for banks that are implementing climate-related financial disclosures?
So we haven't made any decisions on what to do with that information or whether to repeat that exercise. To your point, it was really a learning exercise. How are banks thinking about this, and how are they modeling it, and how does it work really? It's a very, very challenging thing to model. And so that was really the nature of this exercise. In terms of disclosures, we don't really have that's not really our job. That's really the SEC. So, but we don't have a big job on climate, but what it really is to make sure that the institutions we regulate are aware of and understand the risks that they run, including risks from climate.
And that they're prepared, and learning how to, as would be the point of a pilot, learning how to mitigate those risks over time. So what criteria will you use to evaluate whether or not you would run the exercise again and or share more broadly the results of that exercise?
I think we did publish, most of the results of that exercise. So I don't know what to say about that. We're looking at it and we're asking ourselves, what did we learn? What do we need to learn next time? So, I'm not exactly sure what factors we'll be looking at, but we'll be doing a careful assessment of what more we need to do.
Thanks. Thank you, Mr. Chairman.
Senator Hagerty is recognized.
Thank you, Mr. Chairman. Chairman Powell, welcome. Chairman, last week in Portugal, you said that you wanted to be, quote, more confident that inflation is moving sustainably down before you begin to cut rates. You also said in your testimony that you need greater confidence and more good data before lowering rates. Can you give us any color as to what it is you're looking for in the data and how long it might take us to get there?
We need just to see more good inflation data. That's all. We had 7 months of good inflation data at the end of last year. Then we had a quarter, really a month or so, where inflation went up, and now we had one really good inflation reading and one pretty good one. We just need to see more so that the confidence rises. I'm not going to tell.
Are we weeks away, months away?
I'm going to try to avoid sending any really specific signals about time today because it's going to depend on the data. It also matters what's going on in the labor market, though. We've also said that if the labor market weakens unexpectedly, that could be a case for loosening policy as well. Really, we're weighing both those factors.
Here's one of my concerns. I'm sure you probably share it, but we're coming off of a 40-year high in inflation. We've seen the rate of inflation coming down, but we haven't gotten to the 2% target. And my concern, for lack of a better term, is whether or not this might be transitory in terms of the data that we're seeing right now.
That's exactly why we're approaching this question carefully.
I thought that might be your answer. Thank you, Mr. Chairman. Can we shift now to the issuance of Treasury debt? The Fed is the largest holder of Treasury debt. In February, you and I talked about the pressures that our fiscal deficit is exerting on interest rates, which by extension makes your job more difficult. I'd like to talk this time about how Treasury issuance is impacting our economy and our monetary policy. First, just a basic question. If Treasury issuance were to shift drastically, either to the long end or the short end of the curve, would that affect interest rates? Or maybe more simply, do changes in supply across maturities impact interest rates on the yield curve?
I think in theory they can.
Yeah, I agree. As you know, the Treasury Borrowing Advisory Committee recommends that T-bills comprise between 15 and 20% of total U.S. debt. Right now, the Treasury is issuing T-bills significantly above that recommended range. Some people, including myself, believe that this is being done to artificially stimulate markets in the run-up to the election. And it's shocking how little attention this is getting. Any manipulation of debt management of this nature stimulates inflationary pressures and increases taxpayer burden because it's higher cost to issue these bills. So given that Treasury is issuing in excess of short-term debt, which pulls down longer-term rates, isn't it working at cross purposes with your monetary policy goals of taming inflation?
So we take Treasury's debt management decisions. We don't comment on them. We just do our job.
No, I'm not asking for a comment on their decision, but just as a simple mathematical truth. If they're pulling down demand on the long end of the curve, doesn't that
I wouldn't
Work
say
to
that that
contradict
has important inflation implications, no.
You know, it just feels to me the same way that the Biden administration drains the Strategic Petroleum Reserve, that undermines our ability to respond to energy shocks. When the Treasury manages its debt in this manner, it constrains our ability to respond to future economic shocks. And that opens our nation up to very real risk, whether it be amplifying the effects of the Fed's balance sheet reduction, flooding the supply of one of the most important short-term debt instruments. The risks seem to me to be mounting for Treasury market disruption. I'd like to know what your thoughts are, Mr. Chairman, about how the Fed will navigate this and whether you've had discussions with the Treasury about this growing dangerous dynamic.
No, we don't have a seat at the table on Treasury debt management. Treasury makes those decisions, and they don't have a seat at our table on monetary policy.
I just think the risk is very obvious here, though, where we're headed with this type of portfolio
Honestly,
management.
it's completely out of bounds for me to comment on Treasury debt management in any way.
I think you've been dealt a very difficult hand here, Mr. Chair. The Biden administration's policies aimed to gin up the economy ahead of the election. These efforts directly undermine your policy goals at the Fed. That includes excessive issuance of short-term debt. Think about it, Freddie Mac's backstop of second mortgages, unlawful student debt loan cancellations, the draining of the Strategic Petroleum Reserve to suppress fuel prices, and President Biden's own jawboning of the FOMC to lower rates. As you know, the Federal Reserve was structured to shield monetary policy from political influence, and that independence has given the Fed unique credibility in executing its mission. If the FOMC were influenced in any way by political calculation rather than economic data, it would severely damage the Fed's credibility as an independent institution, it would increase uncertainty in our markets, and it would jeopardize the dollar's status as the global reserve currency. Thank you, Mr. Chair.
Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. When the CEOs of giant banks can boost their bonuses by getting the banks to take on more risk, they run the risk that they will end up running their banks into the ground. It happened in 2008 and it happened again in 2023. Back in 2010, though, Congress passed the Dodd-Frank Act. Section 956 told financial regulators, solve this problem. 2 months ago, regulators put forward a proposal, but the Fed refused to join. Now, in 2018, you told this committee, Mr. Chairman, that you, quote, expect that banks will have in place compensation plans that do not provide incentives for excessive risk-taking. In other words, you trusted the banks to write their own rules. So let's see if they actually have. One thing the proposal would do is require big banks to delay bonuses for a broad group of critical employees who are able to gamble with the bank's finances, like the head of a trading desk, for example. Chair Powell, in the 6.5 years since you said trust the banks to regulate themselves, how many of the 10 biggest banks have put policies in place to delay annual bonuses for this broader group of critical employees whose risk-taking could endanger the bank?
I don't know specifically. My guess is all of them. Since the financial crisis.
You're the regulator who said trust the banks to self-regulate so we can avoid another financial meltdown or another bailout. And you don't know if they did or didn't do that?
Well, it's a very, very specific, narrow question you're asking
because it's something a regulator should do. You think the answer is 10 out of 10? The answer is 0 out of 10.
Yeah, I doubt that.
Well, go back and look, because we've looked at their statements on this. Another thing the proposed rule would do is require the banks to consider flat-out banning bonuses and bonus pay for executives who took risks that threatened the stability of the bank. So let me ask you this one, Chair Powell, in the 6.5 years since you said trust the banks to regulate themselves, how many of the 10 biggest banks now have policies that would require them to flat out deny bonuses to executives that have engaged in inappropriate risk-taking?
I don't know the answer to that. By the way, I never said trust the banks to regulate themselves.
I'm sorry, do you want me to go back and quote you again exactly?
Trust the banks to regulate themselves?
When you say, I expect that the banks will have in place compensation plans that do not provide incentives for excessive risk-taking.
Right, pursuant to the guidance that we issued in 2010, which is quite
And you
detailed.
have not issued a guidance since you made these comments, since you became chair. And how many banks have actually put in place the regulations that you said, I expect the banks will have in place? The answer is out of 10,
It was covered
zero.
by the 2010 guidance, actually.
No, you said in 2018 that they would put these
I
in
said
place.
they would have in
and
place.
no, that is not what you said. So look, Chair Powell, the last guidance on this subject, as you say, was in 2010, which is before you were at the Fed. The Fed has now refused to join the other financial regulators in finalizing a rule implementing Section 956 as Congress directed. So my question has been, how many of the 10 biggest banks have done this? And the answer is zero. Dodd-Frank was passed 14 years ago. There are still no rules to stop banks from rewarding executives' risky behavior. When you were asked about these Section 956 rules or lack of rules in March of this year, you said, quote, that you wanted to understand the problem we're solving before proposing a rule. Chair Powell, the law does not say Jerome Powell, in his infinite wisdom, should decide if we have a problem with executive compensation. The law passed 14 years ago says executive pay is a problem that threatens the stability of our economy, so write the rules to rein them in. Finally, the other financial regulators have proposed such a rule, but the Fed has not joined. Chair Powell, I understand why the 10 biggest banks in the country like your approach. You let them do whatever they want, but you don't work for the giant banks, you work for the American people. I urge you to do your job. Thank you, Mr. Chairman.
Senator Vance from Ohio is recognized.
Thank you, Mr. Chairman, and thanks, Chair Powell, for being here. I appreciate you coming by our office last week to discuss some of these issues. I want to ask something I imagine most of my colleagues are not asking, which is the relationship between immigration, particularly extremely high illegal immigration levels under the Biden administration, and the persistence of the inflation problem. And I recognize this is not your policy focus, but you are the Federal Reserve Chairman, so I just want to get your views on this. And in particular, I want to read you a quote from Mickey Bowman, who's one of your governors. And this says, in a quote, "There's a risk that increased immigration and continued labor market tightness could lead to persistently high core services inflation. Given the current low inventory of affordable housing, the inflow of new immigrants in some geographic areas could result in upward pressure on rents as additional housing supply may take time to materialize. With labor markets remaining tight, wage growth has been elevated at around or above 4%, still higher than the pace consistent with our 2% inflation goal, given trend productivity growth." The Bank of England, I believe, produced a recent report on this issue in the United Kingdom, obviously a different economy in a different country. But what do you see as the relationship, in particular, given that housing is such a big driver of the inflation that we've seen over the last few years? As Senator Hagerty said, the highest in 40 years. What role do you see illegal immigration playing in driving up housing costs, which, of course, is a main driver of inflation for American citizens?
Let me quickly start by echoing your first comment, which is we don't comment on immigration policy, but we do comment on inflation. So I would say this. Many people came into the country over the last couple of years, many of them through asylum requests, and went to work. Labor supply increased a great deal. It's not, there's no clear answer, but my sense is that in the long run, immigration is kind of neutral on inflation. In the short run, it may actually have helped because the labor market got looser because there were more people. But to you're talking about housing specifically. There will be, I'm sure there are places in the country where new people coming into the country, I'm sure you can find places and they exist where that will have contributed to an already tight housing market. But overall, in terms of aggregate inflation, I wouldn't say it's a driver one way or the other.
So I want to follow up on that thread, but just on that topic of particular areas that have been affected, Chairman Brown, I'd like to ask unanimous consent to submit a letter for the record from the city of Springfield in our state, the southwestern part of our state, which I think highlights a very real example of this particular concern, straight from the horse's mouth itself. Now, this letter, I want to quote from it. Springfield has seen a surge in population through immigration that has significantly impacted our ability as a community to produce enough housing opportunities for all. Springfield's Haitian population has increased 15 to 20,000 over the last 4 years in a community of under 60,000 previous residents, putting a significant strain on our resources and ability to provide ample housing for all of our residents. And end quote there. And Mike,
Without objection, so
thank you. In my conversations with folks in Springfield, it's not just housing. They're trying to build 5,000 new housing units, which is a very Herculean task in a town of about 55,000 people. But it's also hospital services, it's school services, there are a whole host of ways in which this immigration problem, I think, is having very real human consequences. But I want to go back to just one other question, Chair Powell, on this immigration and labor supply question. So one of the euphemistic ways in which economists, I think, sometimes talk about labor supply and immigration is they'll say something to the effect of, well, an increase in labor supply has put downward pressure on labor prices. And what they're effectively saying is that increased immigration has put downward pressure on the wages of American workers. I wonder, when you hear sort of your colleagues and other economists outside of the Fed talk about the influx of immigration and the fact that it, I think, admittedly has put downward pressure on wages. Okay, so obviously that has put some downward pressure on inflation, but it also puts downward pressure on the wages that people earn to pay for their families. Why do we see that as a good thing? Or maybe that's wrong. Maybe the premise is fundamentally incorrect, but why do so many economists treat an influx of new labor as a good thing? If labor is constrained, labor supply is constrained, doesn't that lead to rising wages for American workers?
So I'm certainly not trying to put a value judgment on it. I will say, though, this is all happening over the last couple of years in a context of an extremely tight labor market, now a little bit less tight, significantly less tight, but you've got a worker shortage, you've got businesses who have jobs that are open, you have, more than one job opening for every unemployed person. So you've got a very tight labor market, and it's addressing that, and we're having wage increases are still very high, but they're coming down to a more sustainable level.
Fair. And Mr. Chair, I know I'm over time. Could I just one more question on this? Thank you. I understand your point, Chair Powell, and again, I'm not ascribing value judgments to you, but if we say we have a really tight labor market, and we say that there are more than one job openings per worker, there are two ways you could plausibly solve that, probably more than that, but two obvious ways you could plausibly solve that. One is through a new influx of workers via the immigration system. Another way is by raising wages and bringing some of the workers that are on the sidelines. I think specifically of the 7 million prime age men that have dropped out of the labor force. Like, why isn't that more the focus of policymakers rather than, you see a labor shortage, rather than bringing in a large number of new immigrants, why not try to boost wages in a way that brings some of those workers off the sidelines? That seems to be a much better focus from my perspective.
Certainly, that's a very constructive focus. I would agree. It's not. I don't think it has to be one or the other.
Thank you, Mr. Chairman.
Senator Van Hollen from Maryland is recognized.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you. And let me first applaud you and your team at the Fed for, at least so far, being on track to bring down inflation without, so far, triggering a surge, big uptick in unemployment. But you know very well that that's a risk if the Fed does not act with full awareness of that danger. When you were here in March, you said that you were, quote, well aware, unquote, of the risk to unemployment of waiting too long to cut rates, and, quote, very conscious of avoiding it, unquote. Since then, we have seen a slowing in the economy and a rise in unemployment. I'm just reading something today, an analysis with Diane Swank, KPMG's chief economist, who summed it up by saying, quote, the ice is thinning, red flags are emerging for the U.S. economy, unquote. The engine of the economy, the labor market, is cooling faster than previously known. The unemployment rate is above 4% for the first time since 2021. It is taking workers longer to find jobs. Economic activity in the service sector, which is responsible for 2/3 of economic growth, slowed in June. So my question, Mr. Chairman, is how do you take all of these factors into account? Do you share my concern that as of today, there is a real risk of an increase in unemployment larger than is currently on your radar screen?
Yeah, I mean, absolutely. I do, even more so than in March when we were here, see that. So we've seen, and I think the latest data show that labor market conditions have now cooled considerably from where they were 2 years ago. And I wouldn't have said that until the last couple of readings. And I would say also that for a long time, the risks were more that we would fail to hit our inflation target. I think the risks as to the two statutory targets we have, price stability and maximum employment, I think those are coming much more into balance. My colleagues and I are looking at that, and we fully understand that we have to manage this process of administering the federal funds rate and deciding what to do with it in a way that manages both of those risks. And the two mandates are equal under the law, and so yes, we do get that.
Well, I appreciate that, and I appreciate the fact that you've seen that that calculation change since you were last here, because I think the data indicates that we are at risk now of not acting soon enough to curb the increase in unemployment, and that if we allow that to go too long, we may see a real uptick there. And so I'm pleased that is very, very much on your radar screen, and hope that will be a really deciding factor as you and your other Fed colleagues determine what to do with respect to interest rates. And as has been said in the housing sector, we are seeing the continuing drag created by high interest rates. So that has been I think all of our colleagues, as you probably heard today, are really hearing from our constituents, understandably, about the very high housing prices. And it's slowed investment in other sectors like manufacturing as well. In my final minute, I would like to turn to the question that Senator Warren asked, because I asked your colleague, Vice Chair Barr, about exactly this question of implementing Section 956 of Dodd-Frank when he was before the committee just a short time ago, May 16th of this year. And I asked him about why the Fed had not moved forward along with other agencies with respect to implementing what the law is and what the law has been for 10 years. NCUA has signaled their intent to propose a rule. The SEC has indicated that they're moving forward. I said to Vice Chair Barr that I've not seen any notice of proposed rule from the Fed, and can I get a commitment that the Fed will quickly begin to process implementing this law by issuing a notice of proposed rule? His answer was, and I'm quoting, "In discussions with my colleagues, it became apparent that at the board, we believe we need to conduct some further analysis before deciding what steps to take. We are committed to following the law, to implementing Section 956, but we have further work to do." Count me among those who are very frustrated that we're now 10 years after this law was passed. Vice Chair Barr committed to following the law. I'm sure, Mr. Chairman, you would commit to following the law. But why is it that it's taking the Fed so long to move forward with implementation of 956?
So I like to look at the actual language of the statute when and what it says is it calls on the regulators to make determinations about specific incentive compensation practices that cause excessive risk taking, and we haven't done that. We did. That we put in place pretty serious guidance back in 2010 after putting it out for comment. We looked at all these questions. It's been in place for 14 years. We supervise on it. And, so the question I'm asking is, okay, let's go out and look at what the practices are that are happening now, not that are happening before the global financial crisis when it was obvious that things needed to be changed. And we put the guidance in place. It seems to have largely worked, certainly as it relates to the large firms. And then let's design something that is designed to the residual risk as opposed to just taking something off the shelf from 15 years ago and doing that. So and we're working on that at the Fed now. And again, the statute requires us to prescribe regulations or guidelines to prohibit those things, and I want to do that. In a sense, we have done
just very briefly, and is it your testimony that the Fed has already met the requirements of okay?
No,
just want to make that clear, and we do look forward to the Fed moving forward. Thank you, Mr. Chairman.
Thank you, Senator Van Hollen. Senator Brett from Alabama is recognized.
Thank you, Mr. Chairman. Chair Powell, thank you for being with us today. My colleague from Maryland actually just touched on something, but as I was listening to the exchange from my colleague from Massachusetts and her closing remarks, particularly about Dodd-Frank and 956, there was also a comment at the end where she mentioned you working for giant banks versus the American people. Now, I have a long list of questions I want to talk to you about, but I did want to get you to respond to that.
Yeah, that's completely untrue. The things that we're doing are consistent with our international obligations, and they're meant to be the best thing for the American economy, and that's really our only consideration. We have policy differences across various things, but we're all trying to achieve the best results we can for the people that we serve.
Absolutely, thank you. Chair Powell, I have repeatedly talked about my concern with long-term debt proposal and just think that it has not been well thought through. First, I have concerns that it blatantly undermines the tailoring requirement. And on that note, do you believe that 2155 will be applicable to the long-term debt requirement?
I think it applies to everything.
Absolutely.
And on the long-term debt requirement, we have voluminous comments that we're looking at carefully and thinking through the process of what to do about them.
No, I appreciate that because I do believe that currently it lacks a real cost-benefit analysis, and I think it really does need serious reconsideration. And additionally, when you take a look at it and its overlapping nature with Basel III, it seems inappropriate that we would move forward with a new long-term debt proposal, finalizing that rule when we don't even really understand what Basel III is going to mean for capital requirements for banks and obviously financial institutions. So my question for you is just that. Would it be inappropriate to move forward with the long-term debt proposal, finalizing that rule prior to Basel III being finalized as well?
I don't know that I would give you, I can't give you a clear answer on that. It will depend. I mean, Basel III won't be finalized for some time, but that's not to say we wouldn't reach a place where people understand and accept and support what it is that we're doing. And then I think at that point, we could certainly move forward with other rules.
I heard you mention to one of my other colleagues that probably by the time this all took place, it would be the beginning of next year. I would just say my concern, the Fed has said that the long-term debt rule will directly be impacted by the final Basel product. And so, why would it be inappropriate or appropriate to move forward with that before banks can fully understand what they're facing from Basel? So I would just ask that y'all are thoughtful about that. These are a lot of things that people are dealing with and trying to really understand the implications of. And I think we have seen consistently that people are not taking a look at the cumulative impact of these things and not really taking a look at the trickle-down effect. And on that, on Basel, when you testified in March, you said the Fed was aware and fully considering the potential impacts of a proposal on our commodities markets. And I do want to talk about that. The commodities market, our agriculture industry, is 1 in 5 jobs in the state of Alabama. It's 20% of our economy. I am a big believer food security is national security. And the proposal would increase hedging costs by 80%. meaning banks would be far less likely or inclined to offer clearing services. So this could have a detrimental effect to our agriculture community and increase other costs providing food and fiber for our nation. When you look at inputs such as feed, seed, fertilizer prices, those have skyrocketed, and prices have ended up just getting passed down to the consumer. I mean, grocery prices are up 21% since January. So do you believe that the revised Basel proposal will alleviate these concerns that our farmers and our ag community have had about Basel III? And has the Fed done anything specifically to take a look at this? And if not, will you commit to doing so?
So I don't want to get into the specific changes that we're going to make. I'll just say that we're very well aware of and very focused on that particular set of changes, and paying close attention to the issues you've raised.
I appreciate that, and I also hope that the Fed when you craft these types of regulation, you really consider the relationship between the economic impact and the ability of community banks to serve their communities as well. I have heard you mention that to another one of my colleagues, so I know that you're committed to doing that, but that is incredibly important to Alabamians and our main streets all across the state. In my last few seconds, I want to touch on one more topic. So finding solutions to expanding affordable childcare is a top priority of mine, and it is something that I know a number of my colleagues on the other side of the aisle share an interest in and believe is an important issue as well. So Chair Powell, do you believe that increasing access to affordable childcare would positively impact labor participation in our country?
I do believe that.
Thank you.
Stowe of Nevada is recognized.
Thank you. Excuse me, Chairman Powell, thank you for joining us, and I always appreciate visiting with you in my office as well, and your comments. Let me start by a comment you made in the opening. Over the past 2 years, you said the economy has made considerable progress toward the Federal Reserve's 2% inflation goal. Labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. And what we know is that since Biden came into office, the United States has added over 15 million jobs. Under President Biden, we had 41 consecutive months of job growth, and you've just said it again here today, that wages are up as well. Average U.S. wages and salaries grew by nearly, 16,700 between January 2021 and April 2024. So would you agree with the statement by a ranking member earlier today that the U.S. has the greatest economy on the planet?
I certainly would.
Let me ask you this. Jumping around, and there's been talks today about the Fed's independence and how important the Fed's independence is. The Wall Street Journal recently reported former Trump administration officials drafted policy options to weaken the independence of the Federal Reserve if President Trump were to be elected in November. Allegedly, former administration officials discussed policy options to erode the Fed's independence to make it easier for a president to impact interest rate decisions or fire the Fed chair at will. Chairman Powell, how important is it that the Fed has independence to provide economic stability and anchor our inflation expectations?
So I think it's actually essential. It's literally essential. And the good news is I think that's pretty broadly understood, and particularly on Capitol Hill, on both sides of the aisle. I believe that people do understand that we need to do our work in a way that's outside the political process to the maximum extent possible. Of course, we need to be accountable and tremendously transparent. If you look at the box in the Monetary Policy Report on central bank independence, it's really a box about transparency. That's the other side. So I think it's really important. I think it's an institutional arrangement that has served the public well. And, and I do believe that there's pretty wide support for it.
And you just said that it has been intentional and institutional arrangement over the years for this very reason. Correct?
Yes, this is a choice that we make, and I think it's countries around the world, advanced economies, have all made this choice effectively, and the results are clear that you now have independent central banks, and you have better anchored inflation expectations, and you have better performance on inflation and better performance in the economy generally, which isn't to say there won't be shocks and crises and that kind of thing.
And then let me touch on a subject that one of my colleagues just talked about, because I was going to ask about this, which is our immigration. In Nevada, immigrants are extremely important for our economy, They're essential workers, doctors, nurses, and teachers in my community. Can you, without getting into other ancillary issues that don't impact what you do, can you talk about and elaborate on how immigration affects the employment rate and why you look at it and for what reason you look at the immigration issue?
So we don't, as you, just to make the point that you made, we don't take a position, we don't comment on immigration policy. We have no responsibility for it. It's not our job. But, so we just look at the numbers and we sort of try to assess the economic consequences of immigration. And over the last 2 years, 2 years ago, we had an economy where we really had a labor shortage. And what's happened is we've had a wave of immigration, and many of those people have gone to work and gone to work legally through the asylum process. Not all of them. There's also a group that has not been legally processed, but many of this latest group have been have sought asylum and gone through the process of getting a work permit. So what that means is that employers wanted workers, and there were more job openings than there were people actively seeking work or working, and so now you have a new supply of workers, and they've filled those jobs. So we have a bigger economy, but it's not a tighter economy because labor supply has increased the economic capacity. That's just the arithmetic. That's not saying it's a good thing or a bad thing. There are other policy choices that could be made, and they're not for us to make.
When you say greater economy,
A larger economy.
in other words, it has improved the growth of our economy.
The economy grew 3.4%, I believe, last year. And some part of that was that, as Congressional Budget Office analysis showed, and to many surprise, there had been a really significant uncounted group of workers coming into the country who had gone to work. And that's part of the story of how the economy managed to grow that much while inflation was coming down pretty sharply. Inflation came down 2 full percentage points during 2023 while the economy was growing at 3.4%. So, and while these people were coming in. So that is part of the explanation for why we had such an interesting and pretty good year in 2023.
Thank you.
Senator Kramer of North Dakota is recognized.
Hi, Mr. Chairman. Thank you, Chairman. As always, all of my prep goes out the window with the last question. So on the legal immigration workforce front, and I know this isn't your bailiwick, but the issue of workforce is important to the economy. I would submit to my colleagues, beyond even the people who come here seeking asylum suddenly being available for the workforce, we have 1 million plus people who we welcome in legally every year, the vast majority of whom don't come in with a job or even a skill set. And we have so much work to do, colleagues, on the legal immigration front to create a connection between economic demands for workers and the skill set and education that our immigrants bring to us. So most every other country requires some sort of skill set useful in the economy. We don't do much of that. So that's just my speech for the moment. I know, Mr. Chairman, you've gotten already lots of very specific questions, and I've heard a couple of them on Basel III. So I'm just going to make an illustration, and you can comment on it if you'd like. But there's a large generation and transmission utility in North Dakota, Rural Electric Cooperative, Basin Electric, very large G&T, members all over the upper Midwest. And they recently testified in front of the CFTC on Basel III, and they expressed a concern about how operations would be impacted if lending was curtailed or limited in any way. And they gave a real-world example, and I want to just give you that example. Now, remember, this is an electricity supply that we're talking about. It's critical it remains reliable. It's critical that it remains affordable. And part of an electric cooperative's risk management program, of course, is how it buys the fuel that generates the electricity, in this case, natural gas. They may buy natural gas in advance at a fixed price, realizing natural gas is one of those commodities that goes up and down in pretty big swings at times. But they can hedge by buying it at a fixed price for a power plant. And it protects the cooperative financially, since electricity prices, again, follow those spot prices generally. So if spot prices spike, so do electricity prices. However, with a natural gas hedge,
the cooperative can generate electricity at a lower fixed fuel cost, protecting itself and its consumers from high prices. It's an upfront cost on the balance sheet between the cooperative and its bank, but it protects the reliability and affordable supply of electricity. I give you that very specific example, not even to mention that the cooperative model itself has some unique qualities about it. If you would like to comment on it, you've already stated that there are going to have to be changes. I just throw that into your box of things to think about, and you're welcome to comment if you'd like.
I'll just say we're well aware of that issue, and I appreciate you bringing it up.
Thank you, Mr. Chairman. With that, then, I'm just going to speak to this independence issue. I think that the senators that have questioned you on it are correct. I share that concern, as you know, that the independence of the Fed is essential. I have resisted moves within my own party to change it, but those moves are very narrow and not very, I don't think, very realistic. And I appreciate you pointing out that from what you can tell, at least on Capitol Hill, we're all pretty much united on that front. Perception does matter. It matters a great deal. And you and I have had discussions over the years on, you were very, you admonished us strongly as Congress to spend what we needed to spend to get through the pandemic and to maintain the economy. I think you were right to do that. You were just as aggressive in not responding to calls to rein it in a little bit when Democrats brought the Inflation Reduction Act and the American Rescue Plan to the forefront, and I think really basically hijacked the economy and put fuel on inflation. But perception matters, and so I would just submit to you, and you haven't said you're going to do this. I don't have any reason to believe you'll do this, but any move to lower interest rates or move interest rates either direction before November 5th could certainly be a bad perception, even if there's a strong push to do that. I know you understand that, but I just want you to know that as long as you remain independent, I'll be on your side. I think neutral is a good place to be. And by the way, you have one of those jobs where being boring is one of the most noble things you can be. So great job. Thank you.
We do our best. Thank you, Senator Kramer. Senator Warnock is recognized, who is decidedly not boring.
Thank you very much, Mr. Chairman. The latest monetary policy report shows inflation in housing costs is gradually easing. That's good news. But many Georgians still feel the sting of unaffordable homes and mortgages. And one reason for this, you and I have discussed this, is that we aren't building enough houses. 2022 study published in the Journal of Economic Geography found that for every 10% increase in the housing stock, rents decreased by 1%. We've discussed this issue, particularly the effects of housing supply on housing costs. And we agreed that while the Federal Reserve does not control housing supply, it can help create the environment that encourages the construction of new housing, particularly affordable housing. Chair Powell, how has the Fed been working to foster an environment that encourages home construction, and what, in your view, are the challenges that remain?
So, I mean, in the long run, the absolute best thing we can do for the housing market and for the economy is to sustainably bring inflation back down so that people aren't talking about it anymore. And it's just assumed by everybody in their daily lives that inflation will be around 2%, so we don't need to talk about it, which is where we were for a long time. We want to get back to that. Interest rates can come down then, and the housing market can return to the state it was in before the pandemic, which was to say really tight. We don't have enough housing, and that's not really a monetary policy issue. In the short term, though, I would say tight monetary policy weighs on the housing market. The policy works through interest-sensitive spending, and housing is definitely at the top of the list of interest-sensitive spending. So we understand that we're suppressing. Not suppressing, but our higher interest rates, have led to lower housing starts and lower activity in the housing market. But we're doing that to get back to 2% inflation for the whole economy, so that the housing market can be on a better foundation.
Well, yeah, and related to that, when you have these high interest rates, of course, you see across the country, but particularly in a state like Georgia, these institutional investors who are coming into the space, and they're buying houses in all cash, boxing out first-time, first-generation home buyers. And of course, the conditions for them doing that improve to their favor with higher interest rates. Would you agree with that assessment?
I know some of that's happening. I don't know that higher interest rates make it. I mean, some of that's, they're working with.
Well, you got higher interest rates and you got institutional buyers who can purchase it all cash. Doesn't that further?
But they have to borrow the money at higher interest rates. I'm just saying higher interest rates doesn't make their investment any cheaper. And notwithstanding, I understand it's a sensitive issue, and in most markets, it's still a pretty small portion of the outstanding housing stock. But it's not an issue. It's not an issue for us. You know, they're a legal buyer of housing. Our job is really the whole economy. I mean, it's more of a question for legislatures.
So how can the Fed better deploy its monetary tools to ensure that we are meeting key inflation objectives like housing affordability?
You know, I think the best thing we can do is is kind of what we think we've been doing, which is to move carefully as we think about loosening policy and make sure that we do that when we've got greater confidence that inflation is moving sustainably down toward 2%. We're also keeping a close eye on the labor market, and if we see unexpected weakening there, then we could respond to that too. But that's really the best thing we can do for the whole economy, and very specifically for the housing market too.
You well point out that you're limited in terms of your influence there, and there is a role for Congress to be sure, which is one of the reasons I wanted to be on this committee to introduce a down payment toward Equity Act with my colleague Senator Butler. This bill would help first-generation home buyers compete with Wall Street institutional investors by helping with down payment costs, closing costs, and costs to reduce interest rates. I look forward to continuing productive conversations with you and looking at how we can make housing more affordable for all Americans. I'm running out of time here, but one of the other concerns that I maintain is with respect to reducing the racial wealth gap. Is this issue around home appraisals. And the Fed is part of the interagency task force on property appraisal and valuation equity. What expertise and perspective has the Fed brought to this task force? You know, how are you responding to this issue of home appraisals?
So, as you know, we've been an active participant in that task force, and we bring all of the expertise we have in the housing market, as well as regulatory, supervisory, and economic expertise generally, as we look at that. And I'll also say that our strongly held view is that discrimination has no place in the banking system, and that includes appraisals and other valuations.
I agree with that, and quickly, I was glad to see that CFPB and other agencies recently finalized a rule that creates strong anti-discrimination standards for automated home evaluations. The Fed has not yet approved this rule. Why not, and does the Fed plan to do so?
Sorry, why do we?
You've not yet approved the rule that was made, that was suggested by the CFPB. They finalized the rule.
But do we? Sorry, I'm not aware that it's a rule that we have to finalize too. Is that the case?
That is my understanding.
Let me follow up with you on that. I'm not aware of that.
Okay. Thank you.
Senator Daines of Montana is recognized.
Chairman, thank you. Chairman Powell, thanks for being here today. Certainly, it's not lost on anybody here. Election season's in full swing. And so from now until Election Day, my Democratic colleagues in Congress, as well as the Biden-Harris administration, will waste no time attempting to sell a fairy tale to the American people that financially and economically, they are better off now than they were almost 4 years ago. When President Biden took office, inflation was at 1.4%. His failed policies drove us to the highest inflation we've seen in 40 years. I can tell you the folks back home in Montana aren't fooled, because in every part of their lives, Inflation is not some kind of hypothetical. They see the everyday impacts of the decades-high inflation brought on by the policies of the Biden administration and facilitated by congressional Democrats. The cost of most goods and services across the economy are more expensive than they were in 2020, and that is a fact that no amount of political spin or mental gymnastics can make go away. Here's just a couple of examples. Breakfast cereal. Prices have increased 28% since January of 2020. Gas prices increased 36% from a national average of $2.63 a gallon to $3.58 per gallon. Egg prices have jumped $3 per dozen in 2024, double the cost of $1.45 in February of 2020. And this dishonesty doesn't stop with inflation. On the labor market, while President Biden and Senate Democrats are celebrating a victory lap in light of the recent jobs report showing a 206,000 new jobs last month, they're willfully ignoring the fact that more than a third of these job gains came from the government sector. Mr. Chairman, I commend you for the job you have done thus far in trying to rein in inflation. I encourage you to continue the fight despite the political pressures you may face. I'm also encouraged by the comments you made earlier this month about the dire need for Washington to address its fiscal imbalance. I couldn't agree more. I've said many times and continue to believe that Washington's culture of reckless spending, of excessive borrowing, is leading us down a very dangerous path by leaving future generations with mountains of debt. And I'm happy to hear you agree with that assessment. Mr. Chairman, given that it's an election year, you're undoubtedly facing immense political pressure to lower rates. Thus far, you've done an admirable job in using the tools at your disposal to fight inflation, and I urge you to continue to be led by data and not calendars or political influence. You said as recently as last week that while things are trending in the right direction, you would need to see further evidence before cutting rates. So here's my question, Mr. Chairman. What specifically are you looking at and looking for as we head into the next FOMC meeting, and how do you factor in this recent labor data, and certainly the significant part of that being government jobs?
So we're looking for two things, really. One is just more good inflation data. And we had quite a lot of good inflation data the last 7 months of last year. Then we had kind of a bump in inflation in the first quarter. And now we've had one good and one very good inflation reading, and we need more good data so that we can be confident that what we're seeing is really, that's where inflation's going, that it's going back down toward 2%. We don't need to see it at 2%. Right now we're at 2.6%. So that's on inflation. On the labor market, to your question, we've seen that the labor market has cooled really significantly across so many measures, and a number of people here today have pointed them out, and the unemployment rate has moved up. You see a labor market that is now pretty much in balance, pretty much where it was in 2019. It's not a source of broad inflationary pressures for the economy now, but it's still a strong labor market. 4.1% unemployment is a very good and historically low unemployment rate. So we have a mandate to support maximum employment, and we also are paying close attention. And if we see that the labor market were weakening unexpectedly, which is to say, more than what we've seen in a material way, unexpectedly, then we could also respond to that, because we have a dual mandate, and we now see the two mandates as more in balance than they were a year ago. Really, the focus had to be and was on inflation. Now we need to be focusing on both goals.
Chairman, thank you. I want to get one question on Basel III, and then we will. In March, this committee agreed that it was seriously flawed and needed to be completely rewritten. I was encouraged to see reports last month that the Federal Reserve had provided other financial regulations with possible changes to the proposal. My question is, I continue to believe the proposal should be scrapped altogether, but could you share what changes you're planning to make and the status of the ongoing development of the updated proposal?
So we've had extensive discussions led by Vice Chair for Supervision Barr with the FDIC and the OCC. We've made a lot of progress in getting close to an agreement on a set of proposed changes. What the work that remains is to agree on a process forward. How are we going to move forward? It is our view institutionally that we need to put the changes out for comment for some period of time so that the public, all members of the public who want to comment, can see them again and comment on them again and see them in the context of the quantitative impact survey that we did. And that's the right way to proceed. That's how we would ordinarily proceed, and we don't see why we would deviate from that. And this is the conversation we're now having with the leadership of the FDIC and the OCC. And my hope is that we'll be able to come together around a way to proceed forward, very soon. I'd hope we would have done so by now, but I believe we will do so fairly soon.
Thank you for joining us today, Chair Powell. I look forward to working with you to strengthen this economy. For senators who wish to submit questions for the hearing record, they're due 1 week from today, July 16th. To Chair Powell, please submit your responses to questions for the record 45 days, no more than 45 days from the day you receive them. Thank you for your testimony. The committee's adjourned.
There we go, Fed Jerome Powell today, and there we go, fantastic. Right, I'm just going to put some intros and outros now for this, and then I've got to speak with Team Fusion for our one-on-one. He's a gold member, and so let me just do that now. Just bear with me. Let me give some intros and outros. Join us now live as we go over to Fed Jerome Powell as he gets grilled in a speech which you cannot afford to miss, giving you all the indication of where we're going, rate cuts, and a few surprises. Now, on with that live interview. There we go, Jerome Powell. That again. There we go, Jerome. There we go, Jerome Powell today. Some strong language there during that interview, some easy questions and some real grillings. What an interview that was, as some of our members were saying there during that broadcast. That's the American government there working in real time. That's how it works. Leave me your thoughts below. What do you think about what Jerome Powell said and the questions he faced? Click above my head for all the links down below in the description, and over here for more information. Till next time, take care of yourselves and each other. Watch Jerome Powell take some very tough questions now from one person at this meeting. I think what you're going to see now will shock you. It gets quite political. Remember, we've got an election around the corner, so what you're about to see now gets quite heated and difficult for Jerome Powell. In fact, he gets dragged over the coals. You decide whether he comes out on the other side okay. And now for a highlight as part of Jerome Powell's testimonial speech today. So what do you make of that? Quite a moment right there, don't you agree? Leave me your thoughts below in the comments. Click above my head for further information, down below in the description, over here for more information. See Jerome Powell get questioned here by a very angry member. She wasn't too happy with him at all, implying that he works for the banks. Do you agree? Does he work for the CEOs and the rich and those that run the banks, or does he represent the people? What do you think? You're about to hear some very heated argument here from a question that was presented to him during his testimonial. And now on with that moment. What do you think of that? Leave me your thoughts below. Quite a strong comment, I think you'll agree. He was taken to task there. Did she win the argument? Was she right? Was he wrong? Was he right? Was she wrong? What do you think? Remember, election season is upon us, and a lot of people are using this as an opportunity to give Jerome Powell a bit of a slap. What do you think? Click above my head, down below in the description, over here for further information. Till next time, take care of yourselves and each other. Okay. You're very welcome. Thank you, guys. Thank you you're very welcome. Thank you for all. I was obviously talking about, there was two particular questions where he got hammered I will put this out as a video. But just before I go, though, Tesla, TSLA. Fusion, what's his name? Team Fusion, are you in the chat? Team Fusion, are you in the chat? Are you in the chat? Thank you, Mike, for explaining that. I'll pass that on to Leah. Okay. James. Just going to make a quick reaction video. Team Fusion, yes, you're here. Is it possible we can go on to the next hour? Because I've been going since 6 this morning and I want to go and check Leah and have something to eat so I'm fresh to come back to you. So it's 12 p.m. Central Time, which is in 40 minutes. So on the next hour, would that be okay? This meeting went on a lot longer than I anticipated, but I wanted to cover it all. So I want to go and check Leah and also have something to eat. Come back in 40 minutes, which will be 12 p.m. Central, to speak to you one-on-one. Would that be okay? Sure, thank you. Okay. Here we go. Okay, here we go. Tesla, I said it would sell off. It's carried on going. But let's debate this. Very, very important. One of our investors asked this question today. James 007, one of our investors, members and a moderator, says, who thinks Tesla stock price will keep going up or pull back soon? As I said, it would go down. It keeps going up and up and up. So obviously people are asking the question, will it keep going up or will there be a pullback? So I answered it during a live, this was made during a live event today, and I wanted to cover it. James then went on to say, John, I'm hoping for a pullback too, but I thought the same when Nvidia was cheap and Nvidia just kept going up and up and up. Could Tesla do the same? Even though I've said it's too expensive, it should sell off. Yes, it can carry on going on forever and ever and ever. So should you buy it? Well, remember what happened last time when everybody got carried away? It went up and up and up. Everybody bought it. They got FOMO'd in, the whole rock and roll lifestyle of Elon Musk, and a lot of people lost a lot of money. This was my reply. James went on to, before I give you my reply, he asked one more question. I'm not buying Tesla at these prices. It's at, but I would not be surprised if it shoots up to $300. That's why it's going up. That's why people keep buying it. So I answered this. This was my response during a live show earlier. The question should not be, should I buy at these prices? The question should you ask is, can I hold and own the business at this price? That's investing, not trading. That is the one thing that people get confused by. They're saying, shall I buy it? It's going up. Well, that's simply just following the trend. Makes no sense. What you should be saying is, can I buy it at these prices, own it, let Elon Musk go about his business, make money for me as a shareholder? I can own it and not have to sell it. Very, very different question. James came back and said, that's a good point. I think Tesla will be an expensive stock in the next few years. And I answered to that, I own it by holding the S&P, and I don't have to sell it. Do you see the difference? And apologize for my spelling there. So that's what it's all about. As you see, James did agree with me in the end. But the difference is, if you're chasing the stock now, no, I was wrong. I was saying it should come down. It should come down. It's overbought. People are buying it because they think everyone's going to own an Optimus in the next few years and billions of us are going to run around with robots. Maybe they will. Maybe they won't. The point is you're buying it ahead of time. Well, of course, that's what great investors do. They buy it ahead of time. However, if you are a great investor and you know how great Tesla is, why didn't you buy it when it was around the 110, 120? You do remember it did go there a few months ago. Didn't see everybody piling in then. Now that would have been smart. And that's what a real investor does and did do. That's what some people did. That's what I did at one point, and then I sold it before I bought the S&P. So now you're buying it. You're not buying it because you did your research. You're buying it because everybody else is buying it, which is the wrong time to buy it, which is here we are again. The stock's going to go up and up and up and up and up. And that's great. There's nothing wrong with buying it. However, this is not a new emerging stock which is having a breakout, which is like a scalp stock where you just buy it and it goes up 300% in 5 minutes. This is an actual business. You're actually buying a business, and you might want to hold this stock, take it all the way up for 5, 10, 20 years. No doubt about it, Tesla is good. But the question is, should I be chasing the stock today, following the trend because everybody else is, or do I do my research, find a great business, and buy it at value? That time has come and gone. Can you own it at this price and forget about it? The answer is 100% clear, no. However, you might say yes if you believe it's going to explode to 1,000, 2,000, 5,000, come up with any number you like, because everyone's going to own a Tesla, everyone's going to own a robot, everyone's going to be using the new the Dojo, the AI, whatever comes down the line, whatever. That may be the case, and I may be wrong. It may be a stock that absolutely explodes. Who knows? Maybe it will. Elon Musk thinks it's going to be the biggest business in the world. Maybe it will. But the point is, an investor that does his research would have bought it when it was around that 110, 120 earlier in the year. You didn't do it, but you're buying it now. Ask yourself, why? You're buying it now because of FOMO. You feel like missing out. Everybody else is buying it. Why am I not buying it? Let's all jump in. And you may remember what happened last time. It went up and up and up until nearly everybody started losing money because it came down and down and down. What are you going to do? Are you an investor? Are you a trader? Do you know your own mind, or are you following everybody else? The only question you ever need to ask yourself is, can I buy the business for this price and own it and forget about it? Well, the answer is yes, because I own the S&P. I own Tesla. I don't have to sell Tesla. It's about 1% of my portfolio. And if you look at my portfolio, because it's about 1% of the S&P. So I have about $1,000 worth of Tesla. Not too shabby, but the point is, if it goes up, I'll benefit from it slightly. If it goes crashing down, it'll make hardly any difference whatsoever. Other businesses will provide me with the gains that I need. I can own the S&P. I don't need to sell it. I don't need to take profits. I don't need to pay tax. And I can sleep at night. I'm not saying Tesla isn't a great business. It is. However, can I own it at these prices? Only if you believe it's going to go up 10 times from here. If not, it can go down 10 times from where it is now. Click above my head, click down below in the description, over here and over here for more information. Till next time, take care of yourselves and each other. All right, guys, I'm going to get off Team Fusion, half an hour. I'm going to have my lunch. I'm going to go and see if Flear's okay, and I'll see you back in half an hour. Click on the link. It'll bring you into my interview screen where you'll be with me here, but we won't be broadcasting. It'll be a private call, and you'll be able to call me. With the link I've given you and the password I've given you, you will come in to my interview screen there. Except there won't be anybody with you. It'll just be a private call. I won't be recording it or broadcasting it at all. Right, that's it from me. Thank you very much. See you soon. I'm a gold member. It's one of the perks and benefits that you get as a member. I'm going to send everybody now, over to the extra channel. We'll be live there for the rest of the day. When I talk to Team Fusion, it'll be muted, so you won't hear him at all. Okay, let me send you all over there to the extra channel if you wish to carry on the conversation, and I'll see you back later. There we go. I'll give everybody the link as well. Give hugs to Leah. I will do. There is the extra channel. See you all in a bit. Yep. I'm coming right now. And I'll see you in a few minutes. Until then, take care of yourselves and each other.
Kevin has become a member. This is a test YouTube membership.
All right. One, two. All right, let's make a start. All right. Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's Tuesday, July the 9th. Lovely to see you all, and just enjoyed a very pleasurable hour with a gold member. As a gold member, you can book in 1 hour Zoom or a video call a month, and we can have a private chat. I just did that with Team Fusion, and that was very interesting indeed. Going through everything that he wants to talk about, and anyone who's a gold member can have the same service. It was a lot of fun. All right, good stuff. Now then, we've got just an hour to go for the closing bell. I am working on some videos, the Fed meeting, the Tesla question, secret to wealth, and news on the bell. That'll be out later. But right now, it's time for another stock review. So let's go straight into it. We're looking at DocuSign now. Let's have a look. DocuSign, D-O-C-U, DocuSign. Let's load it up there. And let's bring it up here as well. DocuSign, D-O-C-U. Okay. Alrighty. And we'll bring it up on here as well. DOCU. This is for Polo. DOCU. Good. And let's go over to does it have a dividend? Let's have a look. DOCU. I don't think so. But you never know. No, it doesn't. So we don't need that bit of software. What about this here? We'll go VU. 100%. And then we'll do DOCU, DocuSign, 100%. Let's take that out of there, take that out of there. Okay. Let's load up the software. Right. Interesting. Straight away, I got a good idea what I want to say on this one. I can see patterns appearing already. DocuSign. Latest news. Let's open that up. June 24th. Okay. Right, we'll use that. And let's go then to DocuSign, DOCU software company. Sign online. I've used this. I use this app all the time. Right. Okay, we got that. I think we've got everything we need, haven't we? Okay, let's go to here. Okay. Chart. Right. Time for another new review. Let's read the comments. We've got Crag. Hello, Team Fusion. Great chat. Thanks, Martin. It was an absolute pleasure. If you're a gold member, you can book 1 hour Zoom call or an online call once a month to chat through stuff. And that's what Team Fusion did. It was a very enjoyable conversation. Thank you for being a gold member. And I'm glad it was of use. It was very enjoyable for me too. So thank you. Hey team, John Granfor. Hi John. Hi everyone. Hi Rob. Hey Team Fusion and Rob. I've been swing trading Tesla today with a tiny account. Went from 560 to 740 today. So I'm up $180. No, you're not. Because of course you've got to pay tax on that unless you did it in your IRA. If you did it in your IRA, then that is free money, and you're absolutely right. You've been able to benefit from that. But if you've done it in your main account, your brokerage account, then you won't be up that much. You'll be up more like 140, not 180, because you've got to pay 20% tax out of that. Somewhere in that region. Of course, doesn't work quite like that, but just worth noting. Hey, up banana heads. How are you, Vaz? Lovely to see you here. Right, let's go straight into our next review. Let's do it. Leah as well. She's lying on the sofa right now in the dark. Lying back, relaxing. She's doing well, taking time. Martin, it's time for the piano. Sebastian, yes, it's always time for the piano. Lovely to have you here. Yeah, we do a concert every Friday. Do you join us on Fridays for the concert? I can't remember. Anyway, let's get straight into our next. How's Leah? She's well, thank you. She's resting. She's taking like special medication for her eye, but she's doing well. It seems to have fixed the problem. She's now just got to go through the recovery stage, which she is doing. So we're all good. All right, let's make a start. This is for Polu. Let me take this out here. Cut. Take it to the top. Put it there. Right. Okay, let's make a start. I live in the UK, Martin, so there's an annual exempt allowance for capital gains tax of 6,000 or so. Oh, wonderful. So you can trade on your main brokerage, make $6,000 and pay no tax on it. Well, that's very nice indeed. I like that. Congratulations to you. That does make a big difference. Yeah, absolutely right. So nice one. All right, let's get straight into it. Time for another stock review. We're looking at DocuSign. Can you make money on this? Does all the money add up? Let's do our figures and look at the numbers on the board. Weigh it all up. Scratch our chin. Yes, you've guessed it by now. Let's do all of that. Look over the numbers and make an informed decision whether we should buy, hold, or sell this stock. Is it one for you? What is DocuSign? Well, tap the like button. Consider subscribing, and I'm going to show you all the amazing things that you're going to get in this review. You're going to see the balance sheet, the profit, the loss, the intrinsic value. Going to use the most advanced algorithmic software, which you'll all be able to get access to. Look at the margins, look at the basic numbers, the deep numbers, the insolvency score, who's buying on the inside, who's selling on the inside. Let's take a look at the website, latest news, insiders buying and selling, what's going on, what about how it compares to the S&P 500. All of that coming up in this review, so you can make an informed decision whether this is right for you. Can you make money from this stock? Well, full disclosure, I only own the S&P. I'm 100% in the S&P. I don't own any individual stocks. just the S&P. That way you know my views are real, honest, genuine, unbiased. Not here to promote, sell anything. I'll never message you saying, hey, buy this, buy that. But of course, if you want to buy one of my mugs from the shop, be my guest. But I won't be messaging you to ask you to buy or sell or do anything. I'm just sharing with you my opinions, and that's all they are. But they are based on the truth, honesty, and no bias whatsoever. So if that all appeals to you, click the like button, click subscribe, ring the bell. This is being done for one of our members. If you are a member of our channel, we'll do a full review for you. Yep, you can do it for just $1. Absolutely. As a member, you can get a review like this, up to half an hour video, which will not only provide you information, it'll trend on YouTube, very often number 1 or 2. It also accompanies Meet the CEO series. I interview CEOs on my show. And we'll tell you how you can get the CEO. You can get the CEO of this company on the show in a few minutes. So without further ado, let's get straight into it and discuss what DocuSign is. Right, let's start from the very beginning. Did I ask you to subscribe and tap the like? Quite a few times. Probably should leave it by now. All right, let's get on. We do have a technical issue here. I'm still here. I'm still here. It looks like I've lost signal, but I'll be right back. I am still here with you. That's working. We've had this today. YouTube has had a couple of issues today. Let me check what's going on. Am I back with you? Let's have a look. Stream settings. Stream settings. Okay, end broadcast. Okay, go again, go live. Let's see if it picks it up. Just bear with me. We should be back again in a few moments' time. Yep, I think we're back. We had a break in signal there, but we should be back now. Let me make sure we are. Yes, I think we are. We're all good. Again in a few moments' time. Okay, I think we're all set once again. Right, so where was I? Everybody still with me? Okay, you check the main. Yeah, that worked. That picked it up. I was able to continue, but I did get a break in connection there for a moment. Let's carry on. So let's take a look at, where was I? I was over here, wasn't I? So let's take a more detailed look then at DocuSign and see exactly what it is. So here we go. Let's have a look at the main general. Oh, hang on. Look at this.
Charlotte May Weddings Limited has become a member.
We've got a new member, a new sponsor to the channel. A brand new member has just become a sponsor of our channel. I'll talk to you later on. That's wonderful. That happened during a live broadcast. We've just got a brand new sponsor of our show. How cool is that? I'll explain the benefits to our sponsor and all of you shortly. Let's go straight now into the position here. Let's look at the line chart, the general line chart. As you can see here, back from 2018, 18, it popped on COVID. Now, we're going to talk about this in a minute when we get to comparing to the S&P. Straight away, I don't like it. I've got high standards for what stocks I buy, and that is straight away out of the can, because what we had was a macro condition play there. What that means is COVID happened, and that changed the landscape. Everybody went online, a bit like Zoom. This stock popped, and then it collapsed afterwards. I don't like that. So straight away, this is a stock that is subject to macro conditions. I want a stock which grows to macro conditions, but continues to grow afterwards and not sell off. So straight away, I'm saying no buy from me, just like I wouldn't buy Zoom. All right, there are stocks that were affected by COVID that collapsed afterwards. They were trading plays, not interested in stocks like that. I buy stocks I can own for 20 years, not for 20 minutes. That doesn't interest me at all. So there we can see a very good example of a COVID play. Let's carry on now. DocuSign provides cloud-based electronic signature solutions. Its cloud-based electronic signature platform helps companies and individuals securely collect information, automate data workflows, and sign anything. Show more, absolutely. The firm automates manual paper-based processes, allowing users to manage all aspects of documented business transactions, including identity management, authentication, digital signature, forms, and data collection. Collaboration, workflow, automation, and storage. DocuSign was founded by Thomas H. Gonza and Court Lorenzini in 2003 and is headquartered in San Francisco, California. Listed name is DocuSign. Okay, we have Alan C. Tygeson. I hope I pronounced that correctly. Alan, I'd love to have you on the show. However, I don't go to anyone and sell my services, but what I do is I invite you to join us on a Meet the CEO series. I've interviewed many CEOs and I've got many more planned in the future. To be on our show, it's simple as this. The investors or yourself or your company will get to see this review because it will rank on YouTube. But normally what happens is investors email investor relations. They contact you at investor relations or directly or create a group around this stock, reach out to you, build a relationship, let you know that they are investors in your company and invite you to be part of my Meet the CEO series. And then you can communicate with them. And if you're interested, eventually they'll put you in contact with me. My email is martin@martynlucas.com. And you can be on the show. We'd love to share your story with the world, and maybe you could put me right and tell me that it's more than a COVID play. But anyway, I'd love to have you on the show if you'd like to, and that's how it works. All right. Employees, 6,840, San Francisco, 2003. It's regarded as quite safe stock to own, this one. If you buy it with margin, it's 25%, which is the lowest. $10 billion market cap, quite a decent sized business. 52-week high, $64. 52-week low, 38. So quite a bit of volatility. 104.79, 105 is the price to earnings ratio. Very expensive. Trades on huge multiples. No dividend yield, just growth stock. 2 million is the average volume. 1.31 is the volume today. So don't expect any short squeezes. All right, let's scroll on down and let's look at the trading trends. What we've got here is the how it's trending on Robinhood. You can see it's being traded. It's a trading stock. It's exactly what I'd expect. It's a trading stock, not a long-term investment. Hedge funds, who's buying it? Well, a little bit. Let's scroll down here. A little bit of movement. I'm more interested, though, in those that hold the stock. We've just seen a sell here from Couture Management. I think that it is Couture Management. They've just dropped to 6.5% of their allocation, 4.5 million shares. What about Bridgewater Associates? They just bought 267,000 shares, which is $23 million worth of shares in Q1 of 24. So a bit of buying going on. What about insiders? Let's look for inside trading. Let's have a look at that. See what insiders are doing. This is very, very important. Inside positions. Well, back here we had October 23. We had a 43% buy and a 57% sell here. There we go. What about recently? Scaling down. It's a 50-50 one, this. It's not all buying or all selling. It's a bit of a 50-50. But who is buying? If you follow who these people are. Here we go. The president and CEO. Very important. He sold, but this is only a automatic sell transaction. We're going to come on to that news in a minute. This doesn't matter. 7,900 shares, no big deal. At 425,000, No big deal. That's just tax purposes. Look, automatic sell transaction. It's not the CEO going, I don't like the stock, I'm selling out. It's simply no more than just tax positions and reallocation. Nothing there to worry about. In fact, if you scroll down, insiders, automatic sell, accumulation of shares via a grant. So that's compensation. No one's really buying or really selling at the moment. So there's nothing really to shout about when it comes to inside trading going on at the moment. What about analysis here? This is Morningstar. I don't follow Morningstar. I have access to it because I'm a gold customer, but really I'm not bothered what they say. They're paid to say these things, so who knows what's right and what's wrong. The bulls say DocuSign's market consists of considerable more greenfield space than its typical within software. What about bears say, as the company moves upstream to increasingly larger clients, it is likely to face intensifying competition, particularly from Adobe. Absolutely. Adobe is the king in this space. Don't see DocuSign doing as well. Anyway, again, this was a COVID play for me. I'll come on to that, what I mean by that in a minute. Let's scroll down. Fair value is $65 according to Morningstar. I'll tell you in a minute what the fair value is, but they're saying 65, which means it's undervalued at 52. Okay, sounds great. Economic moat, none. In other words, their margins are slim. They can't really reduce prices and sell less to weather the storm. They've got no economic moat, not good. Uncertainty, high, not good. Standard stewardship, not great. Okay. What about earnings? Well, it looks like it's making some money, but is it growing? Well, not really. It's going sideways. Now, nothing wrong with that. If you own Coca-Cola or J&J and it does the same thing day in, day out, makes money day in, day out, not a problem. Is it growing anymore? I don't think a business, a stock like this can really grow. As it demonstrated, it was a macro play, and that was great. It exploded. It was a chance for it to be introduced to the world, then dumped afterwards. That just says no. If it carried on going, even if it had gone back but not as low as it was, at least it gained something. But to go back from where it was, that doesn't interest me at all. So it beats on earnings, which is good, but going sideways. And if we're not getting a dividend on the stock, what's the point of owning a stock that goes sideways? Not really much point, is there? Anyway, there we go. Let's scroll down and see what else we've got here. Who else are you buying the stock with? Like I said right at the beginning, Zoom, Shopify, look at this, all COVID stocks that popped. No surprise. People bought back in 2020, thought it would be a great idea, makes perfect sense, and really it's just gone back to where it was. No, waste of time. I wouldn't buy Zoom. Block, Upstart, I don't know about these last three. I've never reviewed them, so I can't comment. But I can see that it's in the Zoom camp, which makes sense of why it looks like that. So far, it's not a buy from me, okay? So no, tap the like button if you like this so far. Let's go and have a look now, and let's go and look a bit of the news around the stock, and also we'll look at the website as well. So let's go and look at that now. Here we go. So everything you need to agree. DocuSign, as it says online, you can sign. Adobe do this, not the only ones. Anyone can do it. Anyone can come up with a solution. Now, don't get me wrong. I'm not saying it's easy, but where there's a will, there's a way. They don't do anything proprietary and unique. Anyone could do it, right? Adobe do it. So would I invest in this so far? No. And not very innovative website. It's clean, but it's a bit basic, I think. It doesn't inspire me to jump in, but then it wouldn't do. The website really doesn't need you to do that. It's just telling you what the product is. And you want, you want something that can sign documents. This is an option for you. There are so many options available today. It's like Netflix. I wouldn't invest in Netflix. There are so many online streaming services. Which one do you choose? It makes you very vulnerable. The news, Alan DocuSign CEO Alan C. Sells the shares. We just covered that in the trends, and it's not a big deal to me. It's not a concern. This is just normal tax positions. I'm not going to look at that and go, that's bad. Prefer to see him buying, of course, but you want to be buying yourself before insiders buy, not after, because by that point the stock has already popped potentially. There's a bit more on DocuSign. Now then, I want to share this with you. Before I go into the numbers, the balance sheet and all the rest of it, I want to share with you this here. This is what I'm talking about. If you put $10,000 back in 2019 in the S&P, you've doubled your money. You've got 23 grand now. You're very happy. If you put $10,000 in DocuSign, you've got 13 grand. You're still happy. You've made 3 grand in the last 5 years. Well, it's all right. You could have made more, but hey, you've made money, not to worry, whatever. And that is reapplying the dividends in the case of the S&P. But look what I mean here. You've got the S&P in 2020. It just had a little shock on the pool, little ripple on the pond, went down, as most businesses did, and then carried on rising. It wasn't really affected by it. There was a slight pullback, but we carried on growing our investments, our long-term investments didn't get shocked. They carried on growing. Well, DocuSign, everyone's online. We need this. Let's all buy it. Boom, up it goes. Everybody bought it, and then it came back, but it didn't then continue along the line of the S&P. It dipped below it, and it's continued dipping below, lower and lower. So it got all that, if you like, publicity of how wonderful it is. Everybody's using it. Everybody's buying it. However, maybe everybody bought the stock, but not everybody used the platform. Well, obviously, because if they all have loved it and they made loads of money, the stock would have remained up, or at least above the S&P, with all this free publicity, if you like. But in fact, it's below, and it's continued falling below. So again, another reason not to own it. Prefer to buy the S&P. There's no point to it, in my opinion. But now we'll look at the numbers. So let's go and look at the numbers now, and we'll see if now it actually makes sense. See if we can draw something from this. Okay, so let's go and look at the numbers, and we'll go onto the board here. We'll do our figures, and we'll see if we can scratch out a profit on this stock, shall we? All right, let's go and have a look. Tap the like button and consider subscribing to the channel, and there we go. Right, so let's have a look at the numbers. All right, okay. Let's see how it all stacks up. Let's start off with the intrinsic value. The intrinsic value is very, very important. And this one we can rely on. Here it says our valuation is $73. Now, you may remember a few moments ago when we looked at it, Morningstar gave a general fair value of, I think it was, wasn't it 65? Something like that. Yes, 65, they are saying is the valuation, 65, okay? Which is quite nice, right? Considering where it is today, it's valued, it's priced at 52. We're saying on a base case, it's worth 73. Best case, 100. Worst case, 59. So there you go. We're saying it's worth slightly more than Morningstar. And it's a reliable earnings. It's a reliable valuation. So you might go, well, why aren't we buying it then? Sounds great. Why don't you buy it? Let's look at the financials, shall we? Right, revenue. Revenue is up 2%. Now you can see it's growing, but not much. It's not really, it's not a Tesla. It's not an AI play. It's just a steady growth. And we're not going to buy this hoping we get another COVID situation, are we? So, it's growing. But again, it's growing less than the S&P. What's the point? Why risk it? Operating income up 43%. Operating income expecting a bit of an S-curve, at least for the next couple of years, and then slow down. So maybe buy it for a couple of years. Net income is up 45%. Financing cash flow down 16% at negative 1.1 billion. Investing cash flow, we've got no latest figures. Operating cash flow up at 2%. Okay. Balance sheet, 2.9 billion in assets, 1.8 billion in liabilities. So liabilities are a little bit close to the assets. I like to see a nice 80% difference between assets and liabilities. But what makes it worse is if it's long-term debt. Let's have a look. 2.98, of which 1 billion is cash. That's okay. Don't like too much cash sitting around though. Not when interest rates go down. You need to be able to spend the cash on building the business to make more money, not just sit around earning interest. When rates come down, then what are you going to do? Right, so let's have a look at the long-term or short-term debt. Doesn't appear to have any long-term or short-term debt. That's good, just ongoing costs, ongoing running costs, no debts. That's good. So we've got a nice balance sheet here. The balance sheet isn't going to underperform and be scary, and we don't have any debt really. So we're well funded. Gross margin, 79%. Sounds great. However, you need to compare it to the competition, Adobe. We'll come on to how you can do that in a minute to determine if you're interested in this sector, which is the best buy. That sounds great, but operating margin is 3%. Net margin is 4%. Very, very different than the gross margin. That's what you end up with. FCF margin, 32%. What about ROCE, return on capital employed, 8%. Okay? All positive though. All moving nice in the right direction. Return on invested capital, 4%. That kind of makes sense. It's about the interest rate, isn't it? About 4%. So basically put the money in the bank, I can get 5%. So that's basically what that is. Return on invested capital. All right, anyway, whatever. Return on assets, 4%. Return on equity, we've got 11%. Let's scroll down to our next thing. We've got our overall profitability score, 50. Pretty good, but we need to compare that to Adobe. I'm going to give you the link in a minute so you can do it for yourself. I'm not going to do it for you. What about solvency score? Like I said, they're not going bust. They don't have any short-term or long-term debt. Got a bit of cash, got a bit of money. It's great. It's not a big cash cow like Amazon or Apple, but it's making money. It's got some cash. It's not going anywhere, but it's probably going to go sideways. Now then, Wall Street. Wall Street say worst case scenario, 7% downside, 23% on the average upside, which is good. Beats the S&P by about 10%. And on the highest, 72%. What would be the catalyst to take it to the highest? I don't know. I don't know. Now, here's the competition. Very, very important. I'm going to show you how you can go to that. So very, very quickly, let me click on Adobe just quickly, just to give you an idea how this works. There's Adobe for you. You can use this software. I'm going to give you a link to it in a minute. Look at their margins, gross margins, net margins, moats. Oh, there you go. You just buy Adobe. I mean, you buy the best, you buy Adobe. 74%, 74%. You can see the difference, right? The upside, 10%, not as much because it's already grown, but it's a much more solid company. I would be buying Adobe if I liked this space. However, let's come back to where we were, and you can decide. You can do more research into it, and there's other synopsis, other ones you can look at. Insiders have been selling, but we looked at it. It was mainly for for tax purposes. Nothing great. But remember, when we see selling getting a little smaller and smaller and smaller, that's quite good because you think then we're going to start getting buying. That's what happens. So you could be buying just before, the next round of inside buying. So that's quite good. Short interest, 4.77. No major short interest. I don't expect a short squeeze on this stock. News, sentiment. Let's have a little look. 1 month ago, nothing particular. Shall we hear a little bit of this? 1 month ago, DocuSign slips after earnings. We'll hear a little bit here, just for a few seconds.
Yeah, the quarter was, we'd call it certainly on the soft side. Their net new sales look like they took a leg down from both expectations and the minor recovery the company had seen over the last year. But this is a company that obviously was a huge pandemic winner, and the business is just trying to kind of right-size itself after a couple of years of massive growth.
I was kind of wondering yesterday when this number came out if the market would finally kind of get its head around its new standards for the stock, which is basically single-digit growth. I guess maybe the answer is no. Do you think it's just still like a brutal comparison? Folks looking back at when they were booming and saying, all right, I don't need to own this right now. I mean, valuation's gotten punished already, has it not?
The stock's obviously had a really tough 2 years for a variety of different reasons, whether it's just my general space has fallen out of favor, but then two, growth has decelerated meaningfully. But I think your average investor that's involved with it today is really trying to, grapple with two items. Is one, what is the right kind of durable revenue growth rate of this company? Over the last couple of quarters, the expectation was that this might be able to grow at 10% again sometime in the near term. But the last quarter, last night suggests that maybe, that mid single digit growth rate's the right one. So some expectation differences there. But then two, on profitability, for a slow growing stock in my space, the margin structure, while it's improved a lot the last 2 years, is still suboptimal, and the leverage that we're getting this year is maybe not as much as you would expect if the growth isn't there. So kind of at this interesting point, is the company going to be able to drive more growth, or is it going to be more profitability driven? And at least in the quarter, we're finding that we didn't get either side of that equation.
Yeah.
There you go. Just basically what I already said. If we go down to the sentiment, the last 90 days, 56% positive, not bad at all, right? Last 30 days, 57% positive. Last 7 days, just one news item, all positive and nothing today. Okay, so there is my review on DocuSign. So let's have a look at it. Let's review the facts and decide whether it's worth buying or not. Please do tap the like button if you like this, and subscribe and ring the bell to this news. Now then, first of all, if you'd like to use the software that I use before I give you my final conclusion, it's provided by AlphaSpread, and I partner with them, and all my members can get access to this for free. Click above my head for martynlucas.com. You'll find all links. Scroll down and you'll find AlphaSpread, or look below in the description and you'll find it there. If you are a member of my channel, you can also have the premium service, which basically makes the discount that you get, makes my membership for free. I insist anyone I partner with gives me the best deal, and it is without doubt the best deal. No one has the deal like that. The software is groundbreaking, always gets better. I love it. I use it all the time, and I highly recommend it. I use it all the time to review all of my positions. So that's how you get hold of the software. Now then, as far as the stock's concerned, obviously I don't own this. I wouldn't own it because I only own the S&P, so I can be impartial on my channel. That's what my channel is all about at the end of the day. But if I was trading, would I buy this? No, I wouldn't buy this. It does have some cash. It does have a good balance sheet. It's not got any really meaningful debt, or short-term or long-term. That's good, but its competition is far ahead, and its only benefit was the COVID play, and that gave it an opportunity to grow, and then it just collapsed after that. So really, there's no reason for me to want to buy this. There's no positive to say why I should buy this stock. If you like this sector, you might want to go and check out Adobe as instead of. But really, the only reason why you'd be buying this is if you felt that there could be some online explosion because of some macro condition. Then you're just basically gambling on another COVID outbreak or something like that. I don't know. I don't see the point of owning it. I think there's better stocks to own. It is potentially now good value, but when people say it's good value now, that's because based upon what it did before. Well, what it did before happened because of COVID, not because it was great. Because of COVID, it did what it did before. So to say if you hadn't had COVID and you'd just took that curve out, it would have been flatlining for the last 4 years. Well, then you definitely wouldn't be buying it, would you? There'd be no point. If it had a dividend attached to it, you might consider it because you'd be earning a passive income. But other than that, it's an interesting company. I'd be a customer, but I'm not an investor. I don't see it as the best use of my money, to be honest. I'm sure it's a great place to work, and people that work there get paid and they make money, and people that use the service like it. I think I've used it a few times myself, but I don't see any point in owning the business. Not for me at this point. Click above my head for all the links, martynlucas.com, Alpha Spreads up there and down below in the description. Also, I'll put all the links as well. If you go down in the description, you can open up the More button at the bottom, and it will open up all the links where I always talk about what's above my head. Go and check that out, and you can see there. Over here, I'll put the full Alpha Spread playlist. I've reviewed nearly 200 companies now. Go and check them all out. And down here, I will open a playlist for DocuSign. So if there's any news, any earnings, anyone wants me to cover the earnings, they'll all be down here in its very own playlist. Until next time, as always, take care of yourselves and each other. All right, there is another stock review. Let's read your comments. Polo, hey, I am. I salute everyone and thanks for the reviews. Polo, lovely to have you here. You're one of our members. There is your first review. You do have another one. If anybody wants a review, you become a member of the channel and I will provide a review for you just like that. And not only will you get all the information, but it will also promote the stock as it will rank on YouTube. All of my reviews do. All right, let's have a look. SPCE. Right. Yeah. That might be one of the most unattractive stocks I've ever seen. Yes, exactly. Price to earnings ratio. Not very good, is it? Right. Okay. Let's have a look at this. SPCE. Time for a full analysis of SPCE. Let's use that. Okay. Let's customize the data. SPCE, and do an updated review. All right, okay. Right. 701, 701. Let's do another review on this now. 701. 701 divided by 20. Okay. Okay. Absolutely right. Buy and own this company, not try to trade it. Absolutely right. Okay. Virgin Galactic, full analysis. I haven't done a full analysis, deep dive on the stock for, I don't think, 6 months up to a year. It's now time once again. We're going to address COVID. We have to look at COVID now because how that affected the stock and where we are today. A lot of stocks are being reassessed now to the time since COVID because now things are going back to normal. Also, what Jerome Powell said today at his testimonial presentation. I've got a video coming out about that, where we know rates are going, how it compares to the rest of the market, what the effects were after the split, and where we go from here, and also a look at the financials. We've always said that we can get through to Delta with money, but now we've got some new figures to share with you, which might indicate that is no longer the case. So let's have a look. Who's buying? Who's selling? The money, the debt. Will we get to COVID? Will it go bankrupt? What should you do? Should you sell and take out what's left? Because anyone selling now, of course, is selling at all-time lows. Everyone is losing money who sells now. No one's selling today for a profit. That wouldn't be possible, right? Unless you're shorting the stock, of course, and betting on it going down. We'll also look at the short position. So in this review, we're also going to do a deep dive and look at the the comparison, and this is very important, the S&P, and see when it went up, when it went down, how it compares to a COVID play like DocuSign, which we've just recovered, and Zoom, and other things like that. We'll look at the latest news around the stock. Morgan Stanley are saying it's underweighted, how it's now featuring on Wall Street Bets, where that leaves the stock, and the numbers itself as we look into a deep dive at Virgin Galactic. We haven't done this for a while, but we are about to do it now. So buckle up for the latest full analysis on the stock. Remember, I don't own the stock at all. I often get asked about this. It's not on my portfolio at all. I only own the S&P. I interview CEOs. That's why I'm impartial. Everything I say is honest and real. My wife still does own some on her portfolio, but it's got nothing to do with me. And she's keeping it for the long term, whether it goes up, zero, down, bankrupt, whatever. It doesn't influence me. I don't care about it. It's not important. What's here, what I'm doing here is what it's all about. So without further ado, tap the like button and let's get straight into it. There's quite a bit to cover, so it'll take a while. So I hope you're comfortable. Got a cup of tea? Let's get straight into it. So Virgin Galactic, we've just had a couple of days ago, Virgin Galactic is maintained at underweight by Morgan Stanley just a couple of days ago. This report came out. Virgin Galactic price target raised to $35 a share from $175 by Morgan Stanley. However, it was on the back of some news. At the same time, Virgin Galactic surges 7.5%. Is this an indication of future gains? A few days ago, and why I'm mentioning that, because since we had that little pop, it collapsed. Well, that was more to do with the Fed and rates and other things. We got a little bounce there, but that's all gone again today. We are going to get rate cuts Like I've said, for 18 months, the summer of 2024, we'll get rate cuts, and we will. I've stood by it the longest time. I'm not going to give up on it. Still believe we're going to get it, and it's the summer until the middle of September. So I've got a couple of months to go. Otherwise, I'll be wrong. Let's see. I'm not 100% certain of that, and that's why I'm all in with margin as well. I believe that, and we can all see how the markets have grown and how my portfolio has grown. But this was a few days ago on the basis of all of this, good news coming, and all the markets are surging. Everything's up, whereas Virgin Galactic simply popped and then gave up again. Anyway, let's go into it, and then I'll go into some really scary numbers for you. Virgin Galactic shares ended the last session up 7.5%, which is great at 952. The jump came in an impressive volume with higher than average number of shares changing hands in the session. This compares to stock's 51% loss over the past 4 weeks. Now, as I read this to you, I'm going to share with you there has been institutions, they were all buying, but they've dumped it since then. If we go down here, we can actually see, you can see there the selling going on and how things have been moving. We have seen some hedge funds recently buy in, but it's such small amounts. It hasn't really done a great deal. And if we look at insiders, a lot of people are going, this is great. Insiders are buying. There must be something going on. This is fantastic. However, when we look a little bit more into it, and it's important to do that, otherwise you miss the whole point. These are simply compensation shares, accumulation of shares via grants or awards. It's not insiders buying, loading the boat, thinking this is great. It's a way to manipulate the stock. They have been basically giving away the shares as payment rather than payment with cash, if you like, getting rewarded, compensated in shares. That is all that is. So it looks great, and we see this little surge, and everyone gets excited, going, great, it's all doing well. But in reality, all we've got is compensation anyway. Let's dig deeper and then look at the numbers. The latest uptick in the share price of Space can be attributed to the fact that the company recently won a contract from the International Institute, we know all about that, to fly 3 research astronauts. That was good news, but that wasn't why the stock popped. It wasn't enough. The contract wasn't enough. It wasn't worth enough for the stock to pop up. It was on the other news of the rates being cut and all the rest of it out of the FOMC report. Anyway, this marks the second research mission that IIAS has conducted with Virgin Galactic. The company is expected to post quarterly loss of $5.07 per share in its upcoming report, which of course we will cover live. We've never missed a flight. We've never missed an earnings, and of course we'll cover it live. The links are below and above my head. Don't miss that event. That could be the last earnings, as I'm going to come on to in a minute, which represents a year-over-year change of plus 44%. That's good, right? Revenues are expected to be $3.5 million, up 87% from the year ago quarter. While earnings and revenue growth expectations are important in evaluating the potential strength in a stock, empirical research shows a strong correlation between trends in earnings estimate revisions and near-term stock price movements. For Virgin Galactic, the consensus EPS estimate for the quarter has remained unchanged for the last 30 days. And the stock price usually doesn't keep moving higher in the absence of any trend in earnings estimate revisions. So make sure to keep an eye on Space going forward to see if the recent jump can turn into more strength down the road. Well, now we know it didn't. It collapsed after that. It was a little bit of buy the rumor, sell the news. People jumped in, got out. No one has any faith. No one's owning the stock. They're simply trading the stock, and now it's made itself onto Reddit because of FFIE and GameStop. It's now been dragged into the whole meme craze, and now the stock has got more damage, which is exactly what Eric Kearney wanted from his time working at GameStop. He'd often tell me YouTubers can influence stocks. I'm sure that's what he wanted me to do, but I decline. I'm not interested in playing silly buggers with stocks. I'm interested in owning businesses, building things, not messing around with silly buggers on YouTube dressed up like idiots. Anyway, Virgin Galactic belongs to the ZAX Aerospace Defense industry. Another stock from the same industry, Redwire Corporation, closed the last session. I think we move on from there. That's not important. Okay, let's now go to the numbers. Now, if you like honesty, if you like a straightforward review of a stock, tap the like button. If you prefer something just made up that benefits me, I suggest you go and watch The Wolf of Dubai. He'll tell you can have a training program, give him $10,000 and make money. We provide free scalp trading by somebody who's learned how to do it professionally, paid to do it, and we provide it for free. So you can have our training for free with someone who's actually qualified to do it. We are a very different type of channel. Let's look down now at the numbers. So first of all, this is one thing that drags a lot of people in. They look at the intrinsic value. This is what fueled Fisker. You may remember Fisker popped crazily until it went bust. It shows a valuation of $583 a share. That's right. You heard me right. $583 intrinsic value. People will look at that and go, oh my God, this is the best stock in the world. I'm going to own it. I should buy it. Okay, based on the intrinsic value, yes, you should, because now it's $7. Fill your boots. However, when you read into it more closely, it doesn't use DCF valuation. Now, this is important because these metrics aren't provided. They're not available. The company isn't reporting certain things. We can't evaluate properly. It's losing money. It's not making any money. We can't evaluate it properly, but it can be evaluated without it, and it draws the attention to the stock and makes people think, this is great. I'm going to buy it. I can't lose. I'll keep buying it. That would be a mistake, in my opinion. Let's scroll down. Now, this is where it gets interesting. These figures have changed recently. March, 8.4 million. In revenue. Now, this is what you decide. This is when it comes down to it. Are you buying it, hoping that you can trade it? Or are you buying a business that you can hold for 10 years because it's about to explode? Now, what we've got here, you don't see very often, is a projected huge S-curve, an NVIDIA moment, a Tesla moment, a Bitcoin moment. Are we going to get that for Virgin Galactic? Now, if we are, if you believe we are, flipping heck, you should be loading the boat at this point. However, 8.4 million in March. Estimate June 30th, we'll be getting the earnings soon, 7.3, a decline. And then a further decline, 24. Further decline, spending money, burning through cash, no money coming in, hardly any coming in, 3.2 million, 2.2 million, going down and down. Now, if we can survive this and get to this, 26, 32 million, 64 million, 92 million, 122 million, very, very nice. S-curve. Do you believe we are going to get to that? If you do, hold on to your seats, buy as much as you can, own the business, everything's great. However, I'm going to show you some numbers in a minute which might scare you. Operating income up 9%. Operating income is steadily rising, steadily, no S-curve there. Net income up 11%, expected to rise very quickly in 24. We have estimates, but it's flatlined going through 24, 25. What about financing cash flow? Down 5%. Not really a major deal there. Investing cash flow up 118%. Investing cash flow up 118%. We're spending money. That's the negative. Operating cash flow up 5%. No projections. All right, now then, this is where it gets a little bit of a gamble. It's all or nothing on this stock now. You're either going to be rich or bankrupt. And that sounds silly, but it doesn't really. There's no medium term for this. It's all or nothing. You buy the stock, it makes you rich. Simple as that. Or you buy the stock, you buy your ticket, you makes your choice, you lose all your money. Now, what's the chances of making your money? And what's the chances of you losing your money? Well, if we look at the assets, 1.1 billion in assets. 1.1 billion in assets. Now that includes a rocket and all the rest of it. The bell has just gone. We're making this during a live show. Just wanted to ring the bell for you. We're making this during a live show. I've been asked to do a full analysis for Virgin Galactic, so I'm doing it now. 1.1 billion assets. 765 million is in cash. Because remember, rockets and stuff like that aren't really assets anymore if the business goes bust. Who wants a rocket that's out of date? Now, why do I say out of date? I'm doing extensive research at the moment for a private company that exists like Virgin Galactic with the wings, the whole thing, the feather wings, the whole thing, that can do what Virgin Galactic does without a mothership. Virgin Galactic have lost the edge, the surprise of time. The competition is caught up. It's not public yet. It's not a big deal yet. No one's buying it. No one's talking about it, but it exists. And I'm doing a lot of research into it at the moment, hopefully to get some videos out soon. But there is competition now. As we always said, people aren't going to sit around and watch Virgin Galactic take all the money. At the end of the day, the romance of the company is gone. You know, the last few Virgin businesses died. No one's interested anymore. All kinds of issues. The romance, Richard Branson, the white of shine, the guy with the silver hair, riding in, saving the day. Those days are gone. It doesn't exist anymore, right? Different world. Competition's coming from everywhere. Rate cuts coming, interest rates coming out, lots of new businesses coming onto the horizon, great new opportunities. Virgin Galactic have lost that. It took too long, spending too much money on their private parties, messing and buggering around as they did, and all the rest of it. Anyway, 1.1 billion, 765 million in cash. Okay. Now, bearing in mind, this was a couple of months ago. There's going to be less now. Not earned any money since then. There'll be less. But that's what we have right now, okay? That's what the earnings reports are for. Look at the liabilities. They're increasing to 660. All right? Long-term debt. So we're not just running costs now. We're not just paying to do stuff. We're in debt. We've got debt of 418 million. It's nearly, I mean, if we look at it, 63% of their liabilities. So we're not just paying to run the show and, you know, whatever. We've got long-term debt. Now, debt doesn't do anything. Debt just costs you money. It's not we're spending money building the rocket, which of course we're doing, or spending money on innovation and discovery and whatever. We've got debt. Debt is a noose around your neck. It costs you money. You've already spent the money. It's not doing anything for you other than costing you money. Now, we're going to get rate cuts in September, but only 0.25%. We might not get another rate cut the rest of the year. Rates are going to stay high for longer. They are going to come down, but a meaningful difference is maybe 2-3 years away. And that is what Virgin Galactic need now. So their debts aren't going to go away anytime soon. We have got 1 billion in assets. We've got 765 million in cash. Maybe got less than that. But we've got 418. Nearly all the cash, nearly, is debt. Already spent. Already gone. Looking at that, to me, any delay, any issue, any technical issue, any competition to rear its head and say, we can provide the same service for less, or whatever. Anything that takes away the attention from Virgin Galactic, bearing in mind their marketing is awful, it's all over. If we look at the gross margins, well, obviously the company's been losing money. No one's in surprise of that. 767%. Operating margin, negative 5,710, has improved. Since they stopped flying, the right thing to do, because they want to get more efficient, they want Delta, and so on and so forth. Not spending as much money, not running the business the same way. We're just doing things and we're just getting ready for Delta. We're not putting on flights all the time. Net margin. See, people said, why can't you carry on flying? That's the reason why. You know, this is the reason why. We're spending less money now, right? Net margin, minus 5,301. FCF margin, that's negative 5,718. ROCE, return of capital employed, negative 55%, starting to trail down again, not go up. ROIC, up slightly, return of invested capital. So they're making money on the cash they've invested. Well, that's going to go down soon because rates are going to come down, so this is going to start falling again. What about return on assets? That is negative of 42%. It's going pretty flatline. Return on equity, negative 113% and falling, not even holding. Now then, this is where we've got to look at cash flow, burn rates, increasing. They're now spending, they've saved money on operating costs, but they're spending money on the development now of Delta. You can see the cash flow, how it's been impacted over time. Look at this. Profitability score, 24%. No problem with that because they're doing what they're doing, and they're not flying every day. They're not bringing in buckets of money. It makes sense. They're not profitable like that. That's fair enough. We can live with a low profit. That's okay. We can live with that. But now what worries me is we've got a solvency score of 40. It's getting lower. The solvency score and the chance of going bankrupt is increasing. If this falls to 30, 25, the writing's on the wall, and we're heading in that direction. However, some upside. This is the point. If you believe it can get through to Delta with no issues, not running out of money, even though it is, if you believe it can do that, well, it can more than double its money here, 115% worst case scenario. What about the average? 483%. Well, that would be very nice, wouldn't it? A 4x, 5x nearly. Or what about a 10x? $84. Now, you may remember, I said the stock can go to $100. Now, I don't want to come off disingenuous and claim as a success when I haven't got it. I claim that old money. We're not at old money anymore. Where in fact, at old money, we would be at, I've done the calculation, 35 cents. So I said 35 cents to 100, not where we are today. That's 20 times different. So I'm not trying to convince you and say, hey, I said it would go to 100. People will say, well, you said it would go to 100 when it was 20 times more than it is today. And that is correct. Or 20 times less than where it is today. That is correct. So, of course, that's not on the cards right now. Now, do I still believe it could have gone to 100? Should it be at 100? Absolutely. If they'd flown celebrities, if they've made it trendy and cool, if they'd stayed ahead of the game, if they'd crushed the competition, if they'd secured finance by getting the stock price up so they could dilute, make more money, all of those things, they would be at 100, there would be more money in it, people would have bought it, and it would be great. Look how Nvidia gets the excitement. Look how Tesla gets the excitement. Look how Bitcoin has had the excitement money. Virgin Galactic never attracted any of it apart from the initial flights right at the beginning. Other than that, no one's been bothered, which is a great, great shame. So the point is, you've got two choices now. Using this factual information, you've got to decide, can Virgin Galactic get through to Delta without any more delays, without any issues, still having the customers, still no competition? Then great, we could have $100 stock. However, if you think, like I think, it's going to run out of money before it gets there. If it gets there, there's competition. If it gets there and the customers moves on to something else, any of those things happen, it's going bust. The short interest, No real significant transactions here to shout about. I showed you what you've been looking at, witnessing is simply tax transactions and stock options. However, on my software, which is done properly, we're not focused on that. Whereas online, they're trying to share the narrative that the stock's going up, people are buying. They're not. They're just getting free shares. What about short interest? Short interest is 27.66%. Anything above 20% is excessive with volume, can force a short squeeze. 1, there's not enough volume. 2, where's the good news coming from? There won't be any good news for another year. There's nothing to talk about. The only positive catalyst that we have medium short term is going to come shortly. If I go back over to my app here, is the earnings expected July 30th. Of course, I'm going to cover it. Click above my head down below in the description. You'll find the link. We've been beating on earnings, and earnings has been moving up. If we get a positive earnings, that we are earning more money, they could be taking more deposits, which they're not taking, but maybe they'll surprise us. I don't know. The stock go up, they could dilute, make some money. Stock's going down. How can they do that? Where's the money coming from? If we get a beat, and we've been beating every time, and we've been beating since Q2, then the stock could continue, could suddenly get a bit of a bounce, potentially. However, if we get a significant miss, which is very likely, then the stock is going to go a lot lower. Remember that they reverse split the stock to protect the stock, get it back into SEC compliance above $1. They didn't expect the stock to continue dropping. I said it would. A reverse split is negative. It's weakness of management. They wasn't able to get it above $1. They reverted to a reverse split months before they had to do it. They went to a vote months before they had to do it. Rather than finding a way to promote the business, they decided, sod it, we'll just reverse split it. This hasn't helped. I said it wouldn't. It's not good for the stock, and it's continued to go down, and now we're at all-time lows all over again. And there's no indication that this isn't going to stop. Now, some of you will say, great, this is great. I can buy the stock for nothing. This is what you got to look at. This is what you got to look at. We covered this morning on the show. We were talking about Tesla. And people were saying Tesla's now got expensive when you could have bought it at 110, 112, 117, but you've waited until it's 250. And now you want to buy it. Why do you want to buy it? Because everyone else is buying it. Well, are you going to buy it when everybody else buys it when it goes down or when it goes up? What are you going to do? Make your own decision. Don't be a lemming. You now know from this review how much cash they have, how much debt they have, the potential of the business. Don't look at the stock price. Can you buy this company now for this valuation of the business? 144 million. Can you buy Virgin Galactic for $144 million and own it? Own it. Be an owner. I own the business, so what money it makes is mine. I own the business. Not the share price, the value of the business. The business today is valued at 144 million. You can buy all the outstanding shares today for 144 million. Less, a lot less, a fraction of the cash on the books. Now, if the cash was earning money and interest, it'd be a good investment, wouldn't it? If they wasn't spending any money whatsoever and all their money was just sat in the bank earning money, it wouldn't be a business, it would just be a bank. It'd be a good deal because you would own all of that money, plus the interest it earns. I'll do it. I'll buy the whole thing myself. And I would. I could get together a few people and we could buy the whole business. I know enough people to buy that whole thing. Just buy the whole thing. 144 million, we'll buy the whole thing. Great deal. However, we're not buying a bank. We're buying a business that's spending the cash. The cash isn't going to be around much longer. Another year, that cash is going to be gone. So you're buying 144 million for what? The hope it does well. So now what are you buying? So just because the share price is low and the whole business is just 144 million, that doesn't mean to say you should buy it. Just because it sounds cheap doesn't mean it's worth anything. I would rather buy it for $50, knowing 100% it's going to $100. I can double my money. At this point, it's more likely to go bust than it is to be successful. There's my full analysis on Virgin Galactic. What do you think? Click above my head for all the links. Alpha Spread. Oh, hello. Hang on.
Stephen Lewandowski donated $9.99 through a super chat. Earnings July 23, 2024 MTDR please Martin.
Okay, as a member, you can book a earnings just like that and I'll cover it, make a video on it, promote it and cover the earnings. Thank you very much. I'll write that down in a second, Stephen. So you make the decision now whether it's viable for you. I think it's most likely to go bust. Is it worth risking it? That's your choice. Click above my head for all the links. Alpha Spread, martynlucas.com, the website. Go up there and you will find my link. Scroll down all links page and you'll find the link to Alpha Spread. My members get the plan for free, or my membership gives you a discount, which makes the membership for free. Click below in the description. You'll also find it down there. I'll also put down there and above my head the links for the earnings. The earnings. We'll cover the earnings live. You don't want to miss that, of course. That is make or break for the stock. And over here, I shall put the playlist, and over here, I'll put the earnings ready to go. So you can come and join me. Leave a comment there already. Queue yourself up. Get yourself a front row ticket. Virgin Galactic, there's my latest full review. I'm not here selling training programs. I'm not here when the stock goes up. I'm here when it goes down. I'm here when it goes up. I'm live 12 hours a day. Everything I do is for free. I'm here to help people. I'm not sponsored by anyone. I'm not on the Motley Fool, which has all kind of backing and sponsorship. I'm here telling you the truth. Take it, leave it, subscribe, don't subscribe. Honestly, I don't care. I only want to do what's right for my viewers, the ones that do want to see what I have to say, those that want all the bullshit and the lies. Plenty of channels that will tell you whatever you want to hear because you'll subscribe to that. I don't care. I just want to tell the truth. Above my head, down here, over here, over here. Until next time, as always, take care of yourselves and each other. All right. Earnings, July 23rd. Matador. Let's have a look. SPCE. There's my portfolio. Another green day. Beating the market again today. Up again. Marvelous. MTDR. Available July the 23rd. After hours. MTDR. Stephen Lewandowski. July 23rd. Remember, we're going to earnings season now. First come, first serve. There's only the opportunity to do so many reviews. We have the backup channel. Sensei will do one if we need to do a doubled up. But if you want an earnings, then it's first come, first serve. You've got to be a member. You've got to do a super chat of at least $5, and you can book earnings in, and I'll get up in the morning or late in the evening, and I'll do your earnings for you, and then make it in the video and put it out. $5 is the minimum, and if you do that, you will get your earnings. So that's now booked in. July 23rd, Stephen Lewandowski, earnings for MTDR. Thank you, Stephen, for your support, and that's booked in now. Right, I've got to get off. I've got videos to put out. I'm going to send everyone now to the extra channel. Thank you very much for being here. Let me redirect you to the extra channel. There you go. There. Let me give everybody the link. There you go. There's the extra channel. Everybody watching me on Rumble. Let's have a little look. Let me just get past all the ads. Oh, it's ended. Oh, we had a break in signal, didn't we? We had a break in signal. That makes sense. Go live. Yes, I remember now. So they're not there. Great show, Martin. Get well, Leah. Thank you, John Granfor. Not Grimshaw. Not Gronshaw. Granshaw. Any other version. It's John Granfor. No way $5 too cheap. Got at least that minimum wage, Martin. Geez. Got to at least make minimum wage, Martin. What are we talking about, Danny? I have no idea what you mean. Yeah, John's laughing. Right, okay, let's get out of here. I'll send everybody now to the extra channel. I'm out of here. I've got some videos to make, so I shall love you and leave you. See you on the extra channel. And I'll go and get changed into more relaxing clothes. And I'll be back very shortly making those videos. I'll see you back in the morning for the opening bell. Another great day today on the markets. As you can see, I'm up 0.14. And, I nearly forgot. Charlotte May weddings. You may see in the chat that we now have a brand new sponsor. This is what I'm going to do. So, let me do this now. I nearly forgot. We've got a new sponsor to our channel. I'll be doing sponsorship. Here we go. So, edit this section. And this is Charlotte May. Charlotte May weddings. There it is. And we move it to there. Publish. Okay. All right. So, here we go. There's our first introduction. Then space and Charlotte May at end. at end. Okay, here we go. So let's scroll down. Let me bring back this up again. Okay. So here we go. I'm about to make you a video. Stand by. All right. Are you ready? Okay. We would like to welcome our latest, newest sponsor to our channel. As you know, I do have sponsorship on my channel, but it's not available to Tom, Dick, and Harry. It's only available to our friends and our members. Because I'm not doing it to make vast amounts of money at all. I'm doing it to help our members. So if you are a corporate sponsor, and I've had them before, contact me, offer me all kinds of money. I decline it. It's not for me. I only help our members who watch the channel, watch the show live every day, help them build their businesses. And we're very excited today to welcome a brand new sponsor to our channel. We're talking about Charlotte May Weddings, and let me show you how it works. If you are a sponsor member, it's $99, whether you're a gazillionaire or you've got no money. It makes no difference whatsoever. You don't get preferential treatment. You are all the same. There it is on the home page of my channel. You will see my extra channel. You will see my music channel, and then you will see our sponsor, Charlotte May Weddings, right there. Okay, at 235 subscribers. They've just started a wedding business. In fact, they've been doing it for a while, but they're now going to promote their channel here. So I'd like everyone to subscribe to their channel. So what we're going to do right now is go over to their channel. This is Charlotte May. You get all of this for $99 a month. You can always unsubscribe at any point, and there will be mentions throughout the shows, throughout the week. There'll be all kinds of little things. This show is sponsored by such and such, all right? So I'm now going to invite everyone to this here. There is the channel. Please go and subscribe to it. And I'm very excited to be able to partner with Charlotte May Weddings, because you may or may not know, I'm the world piano man, and I've done some very, very special royal engagements. I've done weddings all over the world. I still do weddings today when I do virtual events, when people have me singing as they walk down the aisle in the church, on the beach. They put a screen up. Sometimes for the honeymoon, they want me to sing them Wonderful Tonight, especially for them. And I do an online show just for the happy couple. So I'm very excited to be involved in Charlotte May Weddings. So there you go. Go and check it out. And if everyone could subscribe to the channel, that would be wonderful. And there'll be more information. Now, I want to thank Charlotte May Weddings for sponsoring our channel today. It's very, very kind. The $99 goes and supports our channel. And I'll do everything I can to promote your business around the world. So once again, thank you for your support. If you will always see them here, as long as they're a sponsor to my channel, on the homepage here, right next to me. So they will grow as I grow, they will grow. Absolutely fan-flipping-tastic. So thank you very much, Charlotte Weddings. And look at that. In the blink of an eye, they've already grown. Look at that. In literally what? 30 seconds? Gone from 235 to 237. Absolutely wonderful. So there you go. If you are a member of our channel and you watch the show and you want to be part of it, you can upgrade your membership to $99 and become a sponsor of our channel, and we'll help you grow and do everything we can to make you grow online. Remember, Google owns YouTube. If you rank on YouTube, you own and rank on Google. Click above my head if you want to be a member. Click below in the description if you want to be a member. Over here and over here, I might even open up some playlists, especially for Charlotte May weddings. In fact, I will, and this will be the first one. One of our sponsors can have their very own playlist, and as they have some news, information, I can record a video and drop it in there for them. How cool is that? Until next time, as always, take care of yourselves and each other. All right. Okay, I'll make an intro video at Charlotte plus intro. Have you ever wanted to grow online, specifically on Google and YouTube, in the most cost-effective way possible? Well, now you can. There's a slight catch, however. It's only for my members. But what the hell? What does it matter? If you become a member of my channel and choose the sponsorship option, which is $99, I will promote your business, put you on the homepage of my channel, get everyone to watch, subscribe, see what you do. I've had corporate businesses come to me and offer me 10, 50, 100 times the amount that I charge for this deal, but I turn it down. I do not want to be a channel that's sponsored, taking money from people to consistently run ads. No, but I do it for my members who watch the show. So if you watch the show and you're a member and you want to promote your business, you can do it month by month. You can upgrade, downgrade, cancel anytime you like. But I promise you, you will grow on YouTube, you'll grow on Google, and I'll be here to help you. If you want to find out more about it, watch our first video of our brand new sponsor who only joined today, and you can see exactly what I did for them and how they grew within 30 seconds on my channel. Click above my head, down below in the description, I shall put the video right here. I just made it a few moments ago of our brand new sponsor. They're going to go up here, and down here I'll put more information, perhaps how to become a member and all the rest of it. Until next time, as always, take care of yourselves and each other. All right. Love it. You just got another subscriber. 238. There you go. 3 subscribers in 3 minutes. 1 a minute. Brilliant. Okay. I'm going to get off and get on with some videos. What have we got here? Looking at some of these short videos. Santorini wedding. Love it. Okay. That's it, I think. I'll get off now. Taking care of that. Taking care of that. $19. Okay. That's it. I'm done. I'll see you back tomorrow morning. Look out for the premieres. Until then, as always... Oops. Been a long day. Tired. That's it from me. Take care of yourselves and each other. All right. We're all done. Let's wrap up the show.
And please, I sent a link on Discord. I think it could be good for the channel. Thumbs up.
Hang on a minute. I was just about to end, but I did get something pop in then. What was that? Where's it gone? I don't see it. I just ended the show. I came back because there was something that oh, it's on the extra channel. On the extra channel. Aha. Hang on a minute. Right. It went on the extra channel. So let me just look here. This is what happened just a moment ago. Vaz, I understand you are busy, but would you have time to see the new show proposal I made for you over the weekend? Please, please. I sent a link on Discord. I think it could be good for the channel. I understand you are busy, but would you have time to see the new show proposal I made for you over the weekend? I meant to send it after the show end. No problem. I sent a link on Discord. I think it would be good for you. Right, let me just have a quick look into Discord then. Just bear with me. Vaz. Now, obviously, you won't want me to play it on here. But, okay, I'll have a look at that now. It's right there. I've got it open. So, yes, I will go and look at that now. I'll go and get changed, get relaxed, and I'll have a look. So, yes, I will have a look at that now. Okay? I know you're trying to get hold of me and do stuff. I apologize for not getting back as quickly as I'd like. It's increasingly more difficult. But anyway, I'll end this now. And I'll take a look at that right now. All right? Okay, let me end the show. Till next time, take care of yourselves and each other. All right. Let's wrap this up. Okay. Let's bring the lights up a minute.
you.